Yeah. So in question number 3, they have given us to value the raw material as well as the closing stock, which refers to the finished goods. So first, let us see raw material X 500 units are balanced, and we already calculated the price of 220 in the last lecture. That how we arrive at 220. That is 200 price minus excise duty of 10 rupees, because that 10 rupees excise duty is refundable in nature. So it is subtracted. Then freight inward and unloading charges gets added up in the purchase cost of raw material. So the total value comes to 220 rupees. And further, they have given us with the replacement cost, which says it is 150 only. Then closing balance of finished goods Y, we have 1200 units finished goods in quantity, and the cost is given as material consumed 220. So we can understand material X is used to manufacture finished goods Y. So the same material gets consumed, as you can see on your screen, 220 rupees. Labor cost 60 rupees. Direct overhead 40. So the total till here is 320. But wait, read the next line. Total fixed overhead was 2 lakh rupees on a normal capacity of 20,000 units. So can I say you can calculate with the you can calculate the fixed overhead absorption rate, right? So the fixed overhead absorption rate here will be 2 lakh divided by 20,000 units, that is 10 per unit. So fixed cost will also be getting added to the total cost of finished goods Y, that is 10 rupees. So then 320 plus 10, it reaches to 330. So what are you have to do? You have to calculate the value of closing stock when NRV is 400 rupees. In the first case, can I say NRV is greater than cost? So in the first case, your finished goods will be getting valued at cost. And if finished goods go at cost, your raw material will also go at cost. So finished goods you will value at 1200 units multiplied by 330. And for raw material, you will value 500 units multiplied by 220. Right? Then in the second case, the NRV is 300 units, 300 rupees, which is less than the cost. So, sir, if it is less than the cost, so finished goods will be valued at NRV. And if finished goods will be valued at NRV, your raw material has to go at replacement cost. So finished goods 300 multiplied by 1200 units, and raw material 150 rupees multiplied by 500 units. Right. So I'll just, I hope you people have tried this question at least once, either in rough or in fair. So I'll just show you the solution as you have to put in exam, the standard solution that you have to put for this. Right. Now see, this is how you will put question number 3. First, you will just show the calculation of how did you arrive at the raw material cost. See, it is very simple. The first table, calculation of cost per unit of raw material X, purchase price minus refundable excise duty plus freight inward plus unloading charges. So we reach to 220. Then calculation of cost per unit of finished goods Y. Same, material 220, labor 60, direct overhead 40, and fixed overhead 10. So total cost is 330. So these two tables are common for both the situations. So you need not draft these table twice. Only once is more than sufficient. Right? Now we solve with the first situation. Now this is the first case. NRV of finished goods Y is 400. Right? So in the first case, what I'll say, since NRV is greater than cost, FG will be valued at cost 330, and so will the raw material be valued at cost rupees 220. And then I'll show the valuation of inventory. That is 1200 into 330, 3 lakh 96, 500 into 220, 1 lakh 10. Don't worry, I'll show you the screen. You can copy it. I'm just discussing the solution first, and then you can check the screen, and if your solution is differing, you can make the necessary changes. Then second situation, you have to first give the heading. If NRV of FGY is 300 rupees, right? Then same statement. Since NRV is less than cost of finished goods will be valued at NRV rupees 300 per unit, and raw material will be valued at replacement cost of rupees 150 per unit. Same value of inventory 1200 into 300, 3 lakh 60, 500 units multiplied by 150, 75,000. Total value 4 lakh 35,000. So this is how you will be putting the solution. The first and second table will be common. So whosoever has not copied the solution properly or who has done in some different way, see, presentation is not a problem. End of the day, your answer should be correct. So you can just take a note of this at the earliest so that we can start with the next chapter. Right. So with the end of question number 3, we put an end to AS2, very important accounting standard from your exam point of view. So please revise this accounting standard maximum before exam, full probability of question coming from AS2. And whatever type of questions we did, similar questions only gets repeated in exam, right? So how you study is first, always go for the theoretical content, right? Once your theoretical content is done, you can go on with multiple questions of this multiple choice near multiple questions, maximum questions you try to cover. Now, some people can do it in this way also. One type of concept you have completed of the AS, and then that type of question you can go and solve. But that will consume a bit time because you have to search the question from that respective concept. So that will consume a bit time. If it is sorted for you, then it is okay. Means, say for example, you're doing the treatment of raw material, valuation of raw material. So you can go and solve the questions with respect to raw material only. If you are going exclusions from cost of inventory, then you can do this exclusion related questions and so on. But then sorting has to be done. Okay, this is from this area. This question is from this area. So that may consume time, right? So the next standard that we are starting today is AS13. But okay, one minute. Is AS13 link available? I think that one note is not available here. That is not available. That may create a problem. Sir, should we refer ICI? Yes, definitely you can refer ICI module, but keep it as a third priority because in after your regular batches starts, you will not get that much time to study. And when the syllabus gets over, then you will hardly have 1 or 2 months, two months left. So I'm not sure whether you will be able to cope up with the content of the module or not. But one assurance that I can give you, that whatever we are teaching in the class, we try to cover maximum module. Means my handwritten notes are done from the module itself. So I have covered almost all the areas of module. I have not skipped any concept. Theoretical content, because in module maximum theory is given and that much theory is not required. So 100% concepts I have completed and theory I have put as per what is required. Right. And now is AS13 given in your timetable link? Because I am doubting AS13 is not there. Notes are there. Now notes are not there. Okay, then we cannot take a chance of doing AS13 now. I have to tell the timetable department to upload this. Because I forgot, I actually remembered I have to put AS13 there, but I think they have, I did not tell them. So I'll just message them in the break. So I'm really sorry, we cannot start with AS13 now because notes are not available with you. So I think AS9 is available with you people. So we have to go with AS9. So not to worry, once we complete AS9 today itself, we will immediately start with AS13. But AS9 is a very much, like I would say, practical accounting standard in from your real life point of view. AS9, revenue recognition. Again, an important standard from your real life point of view. Academically also it is important. You may get a question from AS9. Now see, AS9 is a group 2 part. And group 2, you have almost 13 accounting standards. So they have a lot of choice from the group 2 to select a question from any of the AS, because maximum 6 questions can come in exam. That is 4 in question number 1 and 2 in question number 6. And these people have 13 accounting standards. Right. So out of 13, they have to select only 6 questions. So in group 2, they always have a choice. And in group 2, you don't have a choice and you have to study all the 13 standards. You cannot skip anyone because institute has a lot of options to select questions from. So AS9 is important because the objective is very clear. it will give you the timing of recognition of a revenue. See, we know how to recognize a revenue in the books of accounts. Like to pass a journal entry, we know how to record. Now, say if I am earning professional fees, so my journal entry will be JK Shah Classes Private Limited account debit to professional fees. This is my simple journal entry. So everybody knows, sir, you have to debit the data and you have to credit the income. And if it is a cash sale or a cash service provided, so it will be cash or bank account debit to the respective sale, that is to sale of goods or to sale of service or to professional fees, commission, blah, 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 whatever it is. So everybody knows how to recognize revenue. But the biggest problem is at what time it should be recorded. What is the timing of revenue? That is very important. And that is the major objective of AS9. So AS9 will tell you when should a revenue be recognized in the books of accounts. Now say I am taking a lecture in your batch today for 3 hours and then I'll be having a half an hour doubt solving session. So I'll be paid for every single minute that I am in front of you for 3 hours plus half an hour. So I'll be paid for entirely 3.5 hours. But then the question arises, sir, when should I recognize this revenue in the books of accounts? Is it before 7 o'clock I started your lecture? Or is it after 10:45 I complete your lecture? Or shall I wait till the end of February so that when the Feb end is over, then I'll be getting the payment in the month of March. So I will be recording it in the month of March. Now somebody says revenue should be recognized. I'll just read the chat. Some good answer. Revenue should be recognized at the time when it is realized. Sir, can I say realization means realization in cash? That is what you're meant to say. That is Mr. Naveen, if I'm not wrong. Yes. So Naveen says, yes, sir, you should record the revenue when it is realized in cash. Means, sir, Naveen is following cash basis of accounting. But cash basis of accounting is generally not allowed. Only accrual is allowed. But some proprietorship concerns that I gave you, my example also, I follow cash basis because income tax allows me. But as per the rules of accounting, you have to generally follow accrual. So if we follow accrual, then the answer that Naveen gave, when the revenue is realized in cash, then you have to record it fails. That answer will not be correct. Right? So here, our major focus is timing of recognition. Because one concept everybody is aware that our incomes or our expenses are recognized on revenue basis. That is accrued or due basis. Correct? So that is answer I got. When it becomes accrued or due to us irrespective of actual receipt. That is absolutely correct. But the next question is, sir, when will it get accrued or when will it get due? That is what we are learning over here. That is basically the timing. So today people will say, sir, after the end of 3.5 hours, you can say that your income has been accrued. You're right. You have earned the income. You have earned the revenue because we are pretty sure that JK Shah classes will definitely pay us the money. Right? There is no dispute between us that no, sir, we don't trust you. We will take lecture and after that you will not pay. Then what will happen? So you first give me my 3.5 hours of payment, then I will take the lecture. It is not that situation. So we are pretty sure, we are pretty much aware that our money is safe with JKSC. So whenever we complete the lectures, 1 month is over, we send our 1 month's bill to them, and next month they will definitely clear all the bill within the first 5 days of the month. So we are pretty sure, we are confirmed that we will get our money. Right? So here more is important. What will be the timing of recognition of revenue? So if we go at the objective of AS9, just wait for a second. So what it says, the objective of AS9, the means of recognizing the revenue in the P&L account, and also gives the circumstances in which recognition of revenue can be postponed. So here it gives the means of recognition. Now, when I say means of recognition, it is nothing but timing of recognition. So first objective, it will give you the timing of recognition of revenue in the profit and loss account. And secondly, it will tell you in under what circumstances you cannot record your revenue today, Rather, you have to postpone it to the future. Means don't record it today, wait, hold, record it in the future when certain events take place. This is the simple objective, right? Now, once you're clear with objective, 2-point objective, first, timing of recognition, and second, the circumstances under which the revenue recognition shall be postponed. Postpone means don't record today, wait. Now, why you will wait, till what time you have to wait, that is all. That is what I'll explain you in the next 15-20 minutes, right? Let us go for the definition. Now, what do you mean by revenue? Sir, it says revenue means gross inflow of cash, receivables, or other considerations arising in the ordinary course of business. Revenue means gross inflow of cash, means cash sales and all. Receivables means credit sales, or other consideration means sales made for any other mode other than cash. Means cash is not involved. Means you can take barter exchange over here, that you provided some services, but against that you got an iPhone. That is possible, right? You sold 100 kg of rice, and that party did not pay you cash, but party gave you 75 kg of sugar. That is possible. That is called as other consideration, right? Then further, arising in the ordinary course of business. Ordinary course of business means you should be having that particular revenue earned from your operations, that is arising in the ordinary course of business, right? That becomes revenue for you. Means whatever you do in your day-to-day business operations, from that whatever you are earning, cash, receivables, or other considerations, that becomes revenue for you. Because on personal basis, whatever you earn, now say for example, on a personal basis, I have my personal fixed deposit. So interest that I earn, that interest is revenue, but I don't account it because that is personal nature, right? So personals we don't account in our books of accounts. We keep it aside. We account whatever is there in our day-to-day business operations, right? Here we'll be learning a very, very important concept, matching concept revised once again. And this matching concept I will be linking with WIP of service providers. If you remember, WIP of service provider, I told will be covered in AS9. I told that you will be remaining in suspense. So today that suspense will get over, right? But it will take some time. In the next 15-20 minutes, that suspense will get over, right? Now we'll discuss the scope, and this scope can be asked in exam for 5-mark question. Which are the areas not covered by AS9, or discuss the scope of AS9. So this scope point will be coming in exam for 5 marks. So I've just zoomed that in. So what it says, this AS is not applicable on the following, means there are 5 points on your screen that you can see where this AS is not applicable, but further it says it applies to all levels. So all levels, level 1, level 2, level 3, all the 3 levels of enterprises, it is mandatory for them to follow AS9. So everybody has to follow AS9. No exemption given, because sir, it is one of the basic and most important accounting standard, because revenue is earned by every type of enterprise, and every type of enterprise wants to know when a revenue should be recognized, right? So here we are focusing on not how to recognize the revenue, we are focusing on when to recognize the revenue. Because I told everybody knows the journal entry to record a revenue in the books of accounts. But timing don't know, sir. When should be recorded? Today, tomorrow, 5 days after, 10 days before? That you don't know. That is what we are learning. So the first area where AS9 is not applicable, revenue arising from construction contracts. Sir, because how to recognize revenue and what should be the timing of recording the revenue is cleared with AS7. Because AS7 completely talks about construction contracts. So since AS7 has already given us the measures to recognize the revenue, AS9 will be completely silent. Then point number 2, revenue arising from HP or lease agreements. That will be learning in AS19. Now, if hire purchase chapter is done, I think it will not be covered so early, but there is a concept of HP. I would say simple when you take a loan and you purchase an asset, so you repay your EMIs, and your EMIs includes principal plus interest. So how to account that principals and interest is what you're going to learn in HP or lease agreements, because lease agreements are also very much similar to taking a loan and buying an asset. So AS 19 covers these things, but one logic between AS 19 and AS 9 is very much same. That is with respect to recognizing interest income, because they say that interest is always recorded on time basis, that is accrual. So AS 19 also tells same thing, time basis. AS 9 also says the same thing, right? But whatever revenue you are earning from HP or lease agreements, they are covered by AS 19. So AS 9 is completely silent, and we'll be learning in AS 19 in detail how HP and lease agreements incomes are recorded. Point number 3, revenue arising from government grants and subsidies. Sir, we have separately AS 12 for it. So we'll be learning there how to record this the government grants or subsidies. Then revenue of insurance companies arising from insurance contracts, they'll be following the IRDAI guidelines, insurance regulatory department guidelines they'll be following. So AS is not applicable on them. And gain realized or unrealized, example, profit on sale of fixed assets, that is covered by AS 10 and AS 26 for intangible assets. Right? So these are the 5 areas where AS 9 is not applicable. Right? So before moving ahead, I have completed 3 things: objective, definition, and scope. So is anybody having any sort of query with respect to these 3 points? You can please raise. I'll just wait for 1.5 minutes. If no queries are raised, then I'll move ahead with the most important point. That is the lifeline of this particular standard, that is recognition of revenue. Because this standard only focuses on when to recognize the revenue in the books of accounts. So it is only more focusing on recognition criteria. So here we will not have that measurement criterias or valuation criterias or presentations. No, major focus is what? Disclosures. Oh, sorry, major focus is recognition. Disclosure is also only one point is to be disclosed, because here we are not having any policy or anything such like that. So we are just learning the timings. So let us move ahead with the most important part, that is with respect to recognition of revenue. Now, sir, before going with the recognition, please understand a particular enterprise majorly earns revenues from these 3 areas. I'll repeat my point. An enterprise earns revenues majorly from these 3 areas. Sir, area number 1, sale of goods. 1 minute. Yeah. So anybody is still left to copy? This is the full screen, the portrait mode. So you can take a screenshot as well. So first area from where you can earn revenue is sale of goods. The second area from an enterprise earns revenue is provision of services. That is, they render services and they earn revenue. And third, use of enterprise resources by others. First, sale of goods. Second, rendering of services, or you can also say providing services and earning revenues. And third, use of enterprise resources by others. Now, use of enterprise resources by others means you're earning rent, you have your property is your resource and it is used by someone else, and in that they pay you compensation in the form of rent. So rent, dividend, interest, royalty. These are the 4 points which you earn from the use of enterprise resource by others. So if you have a patent used by some others, your patent is your resource, you earn revenue from your patent. You have a property, your property is your resource, it is rented out, you earn rent from it. I would say it is revenue earned from use of resources by others. You have given loan to somebody, so your money is your resource which is given as a loan, they pay you interest for it. And fourth, you have purchased the shares of a company. So basically you have invested in that company. So company will use your money to expand their business, and against that they will give you dividend, right? So these are the four things that you're going to earn from the use of enterprise resources by others, right? So let us now first start with recognition of revenue with respect to sale of goods. Then we'll go for services. Then we'll go for use of enterprise resources by others, right? Now, sale of goods, when I speak, we will be linking it with to your sale of goods act. And if I'm not wrong, in your sale of goods act, you have learned one thing: the revenue from sale of goods should be recorded when the risk and reward, when the risk and reward associated with the ownership of the goods are substantially transferred to the buyer. This is what you have learned, right? So here also I have put the same point. Ki revenue can be recognized when risk and rewards incidental to ownership of goods are substantially transferred to the buyer. The same point I have written as what you learned in Sale of Goods Act. But before this, I have written something over here. Check the performance obligation. Check the performance obligation. Now you have to understand one thing. Sir, in Sale of Goods Act, we learned that when the risk and reward incidental to the ownership is transferred to the buyer, so you can recognize the revenue. But the next question arises, sir, when does the risk and reward gets transferred? Yes, because everybody knows, sir, when the risk and reward transfer, you record the revenue. No problem. I'm agreeing it. But my question is, when does the risk and reward gets transferred? For that, you have to check the performance obligation of the seller. So as a seller's point of view, if you are a seller and I am a buyer, you have to check what is your performance obligation with respect to the sale of goods. Is it a counter sale? Sir, if it is a counter sale, when you hand over the goods, the risk and reward is transferred, right? But on the other hand, if it is a good, if it is a sale where delivery is your obligation, now say for example, if you go to Reliance Digital, and you buy a fridge, right? Practically you pay the amount at the showroom only, right? But showroom will not make a proper invoice. They will just give you an advance note that you have purchased this particular and you have given so much of the amount, right? Sale will be technically recorded when the performance obligation is completed, and that is when the fridge is delivered. So technically, when the fridge will get delivered, he will give you the original invoice on the date of delivery. What he gave you is just the booking receipt. That is not the actual invoice that they give. Generally, the actual invoice is given on the date of delivery because delivery is their responsibility. And once they deliver it inside your house, right? After that, they can say the risk and reward is transferred. Now, if anything further happens to the fridge after it is delivered, then it is your lookout. But say at the time of giving delivery, the fridge is fell down. Means one of the person who was lifting the fridge, he left it and the fridge fell down and the door has been broken into two pieces. So it is whose responsibility? Sir, it is obviously the responsibility of Reliance Digital only. Right. So here it is more important to check the performance obligation. So as a seller, what is your obligation? And once your obligation is completed, you can say that the risk and reward is transferred. And once the risk and reward is transferred, you are free to recognize your revenue. Right now, let us take with an example with respect to buying or selling of vehicles. So, sir, buying or selling of vehicles, when the key is handed over to the buyer, when the key is handed over to the buyer, I can say that the performance obligation is done. Now, last year, January, I bought a new car, right? So what did showroom people did? Showroom people like kept my car ready, put a red cloth on it. I went and I removed the cloth, right? And they gave me the key in my hand. Giving a key is as good as delivering the vehicle. And that is one of the example of what? Symbolic delivery. So if there is a symbolic delivery done, I can say the performance obligation is over, risk and reward is transferred. So when the key was handed over to me, the risk and reward was transferred. Now you might have seen some videos One Kia Carnival was taken as a delivery, and it was automatic. I think it was from Tamil Nadu only. One person bought a Kia Carnival brand new car for 35 lakh rupees, and when he uh, drove the car, he directly rammed into the wall of the showroom because it was an automatic version, and he was not aware how to use an automatic version. He was using it for the first time, so he thought he's braking, but he accelerated and he rammed into the wall. And a brand new Kia Carnival on the first day of delivery directly went to the, what we say, garage only on the first day itself. So technically, when the key of that Kia Carnival was given to him, the performance obligation is completed. So it is no more showroom's responsibility now. So as a owner, you will just take a walk around of your car. Everything is fine. Okay. If something is damaged, you can claim it at that time only. But once you go out of the showroom and then you realize that, Array, your bumper is damaged, then the showroom person will not accept it. He will say that, no, boss, my risk and reward is already transferred. You did not check your car properly. So there is always a checklist that you have to follow when you buy a particular four-wheeler or a two-wheeler. Whether the stepney is there or not, toolkit is there or not, you have to check everything and then leave the premise. Because once you leave the premise, he will say that my risk and reward is transferred. Now you are the person who will be responsible. So always check performance obligation. That is very, very important with respect to sale of goods. Now, if you take the example of any kind of online shopping, right? What is their performance obligation? If you take Flipkart or Amazon, what is the performance obligation? To get the product delivered at your doorstep. But when you open the package and you see that something is defective in it, now many times it happens, you order a perfume bottle and when it gets delivered, the glass bottle is broken and the perfume gets leaked inside the package. Who is responsible? We are responsible, or it is Amazon who is responsible? So it is definitely Amazon who is responsible. So that is why it is always said that when you get such type of delivery, just open the box in front of that executive. Because technically what happens, the performance obligation gets over when the goods are delivered. So here, what is the Amazon seller's responsibility to get it delivered at your doorsteps? So if something happens between in transit itself, Amazon will take the full responsibility. But once you receive it and after receiving, you damage it. But after, Amazon is very kind, even if you damage and you say that it was a damaged product, they take a return because they only listen to the customers. They don't listen to the sellers. Are you getting this? So, but in technicality, I would say it is our responsibility. If once it comes to our hand and then it is damaged, it is our responsibility. So technically what Amazon will say, my performance obligation gets over. My performance obligation gets over when I have delivered the goods to my customer. So at that particular point of time, I can definitely record the revenue, right? Some examples, sir, being ready with the delivery is one of the example of risk and rewards getting transferred. Means you are ready with the delivery, but it is postponed by the buyer, right? So in that case, you can say that the risk and reward is transferred. Why? Because the billings are accepted. You might have received some payment. You are ready with the delivery, but he is saying, the buyer is saying that please postpone it. So in such cases also, you can say that the risk and reward is getting transferred, right? So if you have delivered the goods, but payment has not been received, no problem. The risk and reward gets transferred. So with respect to sale of goods, it is very important to understand what is the performance obligation of the seller. If the performance obligation is done, you can definitely record a revenue. I'll give you an example with respect to lift. Lift you have in your apartments or the lifts that you see in the commercial complexes. Now, when say Johnson company is a very renowned for lift, Johnson or Cone Elevators is there, Otis is there. So these people now, when they sell lift, they have a contract with you that we will only install the lift because they know how to install their own lift. You cannot get the lift installed by some third party. If you are buying a lift from Otis people only will come and install, right? So technically, what is their performance obligation? Their performance obligation is to get the lift delivered and installed. So once the lift is delivered plus installation is completed, then the revenue can be recognized. But if they say that, no, sir, we will only sell it to you, then it is your lookout. You either install it from a third party, or if you want, we will install it for you, but you have to pay extra for the installation. So if that is the case, then their performance obligation is just delivering the lift to your premises. That's it. And after that, it is your choice whether you have to get it installed from the company or you have to get it from a third party. That is your choice. So always with respect to sale of goods, first check the performance obligation. What are you obliged to do? If whatever your obligation is, that is completed, you are free to record the revenue. Is this point clear to you? Right? And the most important point, that sale of goods, the revenue can be recognized when the risk and reward is transferred. So when does the risk and reward transfer? For that, you have to check the performance obligation. So if your performance obligation is done, you can say that risk and reward is transferred. Correct? Now, sir, before going ahead, one thumb rule to be made for revenue recognition. Now, sir, you have learned in sale of goods that revenue can be recognized if the risk and reward is transferred. Correct? That is first point that you have to complete for recognizing revenue. But the second mandatory point, which will be applicable to any type of revenue that you are earning. And if the second point is not cleared, means if the second condition is not fulfilled, then sir, you have to postpone the revenue. Then you have to postpone the revenue. That is what I've written, circumstances in which revenue recognition can be postponed. So postponement has to be done if the second condition is not fulfilled. Sir, what is the second condition? There is no uncertainty of ultimate collection. There is no uncertainty about the ultimate collection at the time of sale. So when you are, in simple terms, I'll explain, when you are making the sale, you are pretty sure that you are going to collect the money from your customer. And if that is satisfied, then only you can record a revenue in the books of accounts. So that is a mandatory clause. The ultimate collection is certain. Because if ultimate collection is not certain, AS9 does not permit you to record the revenue. AS9 clearly says that you have to postpone the revenue. You have to postpone the revenue if ultimate collection is uncertain at the time of sale. Sir, at the time of sale, if I am uncertain, then I will not make a sale only, na sir. If at the time of sale, I am uncertain that I'm not going to collect the money, I will not make a sale. I gave you the example of MLA in the first lecture. Do you remember? In the first lecture, I gave you an example of MLA recognition criteria we were discussing of AS9. Just for example point of view, I said that MLA came to your shop and he's buying all these goods. Can you stop him? The answer is no. Will you ask him for money? Sir, you want to ask, but you don't have that much daring, right? So at the time of sale, are you certain that you're going to collect the revenue? Answer is no. So don't record the revenue, postpone it. Then I said after 1 or 2 months, the secretary came to you and secretary told that, sir, my MLA person had come and shopped and he has told what is the bill, please tell, I will pay. So can I say at this particular moment, you are certain now the amount can be collected, right? So when you are certain now, you can record the revenue. Means technically the logic is whenever there is uncertainty of collection, postpone the revenue. And the revenue gets postponed till the uncertainty becomes certain. Means earlier you were uncertain, so you postponed. But now you are certain that the revenue will be collected. Please record the revenue. But sir, if it is always uncertain, then you have to record the bad debts loss. As simple as that. Now some person will ask me, sir, what if at the time of sale, it was certain, right? So I recorded the sale. But what if after 1 month, the party turns out bad? Party doesn't make a payment. So shall I cancel the sale? No, sir. You cannot cancel the recorded sale. You have to make a provision for doubtful debts. As simple as that. You have to record the bad debts, or you have to first provide for the doubtful debts. And when the doubtful debts are confirmed that you're not going to receive, write it off against the bad debts. Right? So thumb rule number 1. Sir, whatever recognition criteria we're learning, that is either with respect to goods or services, whatever it is, that condition has to be satisfied. Plus, the second mandatory condition is at the time of raising the claim or at the time of sale, ultimate collection is certain. Because if there is an uncertainty, we cannot record the revenue. Right? If it is uncertain, postpone the revenue. And till what time you have to postpone? Till the uncertainty becomes certain. I hope you are cleared with this point. Right? So now, when will you record the sale of goods? Sir, sale of goods I will recognize when the risk and reward incidental to ownership is transferred to the buyer, right? And for this, I will check my performance obligation. So this is the first condition that I have to fulfill. Plus the second condition, at the time of sale, I am certain that the ultimate collection will be done. So if these two conditions are met, I can say that revenue from sale of goods can be recorded in the books of accounts. Correct? Am I clear till here? Anybody with any sort of doubt for this particular point, sale of goods? Anybody with any sort of doubt with up to sale of goods? Right? So always check your performance obligation. And with the help of the performance obligation, you will come to know that the risk and reward has been transferred or not. Right? So when you are ready to fulfill your obligation, see, note this point also. If you are ready with to fulfill your obligation, but if the buyer is postponing it, buyer says that no, please don't fulfill it now, wait for some time, then also the risk and reward gets transferred. Now, what are the conditions? We'll learn. But many times it happens that the seller is ready to give the delivery, but buyer is postponing it because of the XYZ reasons. So in that case, the seller can say that the risk and reward is transferred because he is ready to fulfill his obligation, but it is postponed by the buyer. Right? So now we'll go for the next part of the topic, that is recognition of revenue with respect to provision of services. Right? So here with respect to provision of services, whatever conditions are there that you have to fulfill, plus one common condition. What is the common condition? Certainty of ultimate collection. Because if this certainty point is not fulfilled, now you can never recognize the revenue. You have to postpone it. Right? So we'll go for the next point, provision of services. Provision of services. Now, sir, what we'll do is services, we will divide it into two parts. Divisible services, indivisible services. Just wait for a second. Yeah. What we'll do is, with respect to provision of services, we will divide our services into two parts. Divisible services, indivisible services. Now, please understand what are divisible and what are indivisible services. So, divisible services means these services are completed in different acts. Means to complete the service, one single performance of act is not there. You have to perform different acts to complete the particular service. Right? Now, if the certain act is completed and certain act is pending, what you can do is, on the basis of whatever you have completed, that much revenue can be recognized in the books of accounts. Means I can give you an example. If you are, say, developing a mobile app, correct? And that mobile app has got 4 different phases, right? And after completion of every phase, you will try it, and if it is okay, you will go for the next phase. Means, say for example, I am here to develop one app for JKSE student, which is a social networking app. Means it is like WhatsApp, but it is intra-group. Intra-group means only JKSE students can use it. Outside world is not allowed. Right? Means it is very much similar to WhatsApp. So what we did is, sir, we first developed the interface and we started only the chatting option. That was the first phase that was given to the provider. But we have already entered into a contract with the service provider that first you will develop the chat option. Once chat is fine, second is you will then develop the attachment options where you can attach all those you can do in WhatsApp. Then the third phase is you will go on for voice and video calls. And fourth and final phase is you will integrate Zoom, means Zoom like environment within our app. So we will not use Zoom, we will use our JKSC app only. So can I say from the service provider point of view, your app is divided into 4 different phases. Yes. And after completion of each particular phase, particular revenue can be recognized. So say, for example, the app developer quoted that we will require 40 lakh rupees to develop this app, right? And 40 lakh rupees you have to pay for these 4 things that you want in your app step by step. So can I say the service is divided into 4 parts? So whenever you complete a particular part, then you can say that a particular revenue has been accrued and you can recognize the same. So when the first part is completed, say 10 lakh rupees, I can recognize as revenue. When the second part is completed, that is with respect to attachment, I can record another 10 lakh rupees. When voice and video call comes, I can record the third part, that is 30 lakh rupees total I can record. And when final Zoom is also integrated, then I can record the last 10 lakh of installment also. So here what they say, service can be divided into parts and revenue recognition is based on proportionate completion method, proportionate completion called as proportionate completion method. So you have to work out the proportion of the work done. Means if I say the first part is completed, means 25% of the work is over. So 25% of the revenue can be recognized. And this proportionate completion can be either calculated by physical observation. So you yourself can physically observe how much part of the work is completed, and that much proportionately you can record. And second, either take a technical evaluation. Means there are third parties who can evaluate how much work is completed. That much part of revenue can be recorded. So here, sir, there is no problem of matching concept. Reason, if 25% of the revenue is getting recorded, automatically 25% of the expenditure also gets recorded. So expense and income gets properly matched. Because what is the concept of matching? Sir, matching concept says that every revenue that you have earned should have a corresponding expenditure, or vice versa. You can say if you have incurred an expenditure, it should have a corresponding income. So here, if you have recorded the 25% of revenue, so for this 25% revenue, you will have 25% of the expenditure also recorded. But sir, when it comes to indivisible services, the problem starts. Sir, indivisible services means these services cannot be broken into parts. These services are services performed as a one single act. Divisible services are performed in different acts. So whenever a particular act is completed, you can record the corresponding proportionate revenue. But sir, here it is a prolonged one single act. You cannot break it into parts. Generally, these are professional services like doctors, CA, CS, lawyers, etc. they provide. Now, if I take our example only, sir, if we have to do the statutory audit of a company, I would say that it is an indivisible service. Why? Because, sir, the service gets completed only when the audit report is submitted. Sir, but it can be divided into parts. Now, how? Sir, when you do vouching and verification, one part is over. When you confirm your datas, when you confirm your liabilities, one part is over. When you clear your queries with the management, one part is over. No, sir. All these have to be done to make the final audit report, because after every one step, I will not be making a report and submitting it. Means I have completed my vouching verification, make a report for vouching verification and submit it to the management. No, sir. All these are the integral part of my single service. And when all these parts are completed, then I can say that my service is completed. And technically, when I submit the audit report, then only you can say that the particular service is completed. Now, say, for example, you get admitted into a hospital for a particular treatment. Right? Say a person is getting admitted into hospital for kidney transplant. So, sir, it is a one single act where he will be admitted, operated, Old kidney will be removed, new kidney will be put. He will be kept under observation for 10 days and then he will be said, bye bye, you are now fine, you can go home. But can that service be divided into parts like first you please come, I will cut your stomach, then you wait, go home, hold like this and go home. Don't remove your hand from here. Come after 3 days, I will remove your kidney. Then I'll keep your kidney in fridge till the other kidney comes. So you please hold and you can be stay alive with one kidney. So after 10 days, you come back when I get a kidney, or I will start searching a kidney after removing it. So that is one act done. So then I will install a kidney. That is the third act done. No, sir, it is not like that. It is a one full-fledged service. So when you go to the hospital, right, whatever amount you start to pay them, they treat it as an advance. They don't record it as a revenue immediately. See, I don't know whether anybody has been interacted with any of the hospital and don't want anybody to interact with the hospitals because that is the worst thing that you can see in your life. Because I've gone through many of this in 2019, worst year for me. So this hospital people, generally when you make a payment, they don't bill you. They give you a receipt that you have paid only this much. The billing is completed when, when the discharge summary is given by the doctor. Because when the discharge summary is given, you can technically say that service is completed. At that time, the doctor will give you the discharge summary, right? And on that basis, your final bill will be prepared. So technically, the hospital recognizes the revenue on the last day when you're getting discharged. And meanwhile, whatever payment you make is all advance. So they record all the advances in name of the patient. So final bill is raised, say 5 lakh rupees, and 3 lakh advance you have already given. Finally, they will say, pay 2 lakh, take your patient and go. So these are all what? Indivisible services, right? So here we have to use the completed service method. Completed service method means you should be recognizing the revenue only when the service is completed. So technically an auditor will record the audit fees only when the auditing services are completed. When I submit the stat audit report, after that I can record the revenue. But sir, here comes a biggest problem of matching concept. And here we are going to learn the WIP of services wala concept. Now see what is I have written over here, that is revenue recognized only on the completion of service. Further, I have written expenses incurred in providing service up to the balance sheet date are transferred to WIP of services. Expenses incurred up to the balance sheet date are transferred to WIP of services. Now, what it is, what is the logic? Please understand with this example that I've put over here. Now, what I'll do is I'll rub everything and write it again so that you people won't get confused. I'll take a bigger eraser. Yeah. Now, please understand, you have started with a particular service, correct? And your service started in the month of Jan 21 and supposed to get over in May 21, correct? So can I say 5 months your service is going to run? Jan, Feb, March, April, May. But sir, between these two, we have 31st March 21, correct? On this date, I have to finalize my final accounts, financial statements. So what happened, sir? When I drafted my PL account, I have already debited to expenses for service. So now technically what is going to happen? January, February and March, 3 months I'll be giving my services to my clients. My service gets completed in May 21. But can I say Jan, Feb and March, 3 months work is going on, right? And I have spent something from my pocket. Yes or no? Assume I have spent 100 rupees per month. So I have spent 300 rupees in 3 months, which I have debited to P&L account. Is everybody agreeing with this? Right? Now we will put matching concept here. Sir, matching concept says that if you have a expenditure recorded on the debit side, you should have a corresponding income. So here I have to record by revenue. But sir, AS9 says that revenue should be recorded when the service is completed. Right? Because it is an indivisible service, and indivisible service, AS9 says that the revenue should be recorded when the service is completed. So can I record the revenue? No. I'll say no revenue recorded since service is not completed. Fine. So can I say problem of matching concept arise? Problem of matching concept as expense can't be matched with revenue? Yes or no? Everybody, are you agreeing to this point or not? You have seen that expense is debited for 3 months, January, February, and March. You provided service, but it is not yet completed. But you have incurred expense, you have to debit it to P&L. But on the credit side, revenue is not there, sir. Revenue ille. Why ille? Because AS9 says record revenue only at the completion of service. As on 31st March, service not completed. So no revenue. Matching concept failed. Matching concept failed because expense is there, revenue is not there. So what you do is, sir, if this is my balance sheet, you have to transfer this over here as WIP of service 300. So this will be removed. So you have to transfer expense incurred to WIP of service on balance sheet date, so that your matching concept does not get violated. Are you getting this point? Right? Now in the next year, this is your P&L account, correct? So next year, what will happen, sir? April and May, 2 months also you will provide service and you might have incurred some expenditure. Yes or no? So that expense you will put here to expense for service 200. Correct? Correct. And service is completed in month of May, so revenue can be recorded. So finally we are getting our revenue by revenue 700. Correct. Now what you will do, sir, now remove this WIP from the balance sheet and again transfer it to P&L, because that WIP becomes your actual cost now, because now it is finished. So here I will add up plus WIP 300. Are you understanding this treatment? Right? Now some person will say, sir, what if till March you got some amount from your client? You might receive some advance from your client. No problem, sir. Whatever you received, put it on the liability side of the balance sheet as an advance. Right? So if you have received out of 700, say you have received 400 as advance. So what you have to do, put the advance over here, 400, right? So next year, what will happen when you record the revenue? You will show the revenue as like this. By revenue, in the form of advance, you got 400, and in bank directly you got 300 this year. Total revenue will be 700 rupees. So what rule I can make here? Ki when service is completed, revenue is recognized in PL, and WIP of service, if any, is debited to P&L and removed from balance sheet asset. But sir, income received in advance will be subtracted now. Arey madam, who was he, sir or madam? Whosoever it is, I'm not understanding whether sir or madam. Now please understand, whenever you receive an advance, advance of, when you receive a particular advance, right, you have to record it as a liability. Advance incomes are always recorded as a liability. So when you receive the advance, your journal entry will be bank account debit to party. Bank account debit to party, and that party is put as an advance on the liability side. And in the next year, when the income gets accrued, that advance will be added up to your income. The treatment that you are saying in advance income will be subtracted is not correct. You're talking about prepaid expense, because advance expenses are subtracted. I hope you're cleared with this point. So always remember with, always remember with respect to your indivisible services, if as on 31st March, any service is yet to be completed. So obviously the revenue may not have been recorded. So whatever is the expense that you have recorded with respect to that service in the P&L debit, please transfer it to WIP of services, because revenue cannot be recorded, right? And when in the next year or so on, the service gets completed and you record the revenue in the P&L, at that time, what you have to do, remove the WIP from the balance sheet and again put it to the P&L account debit side. So this all we are doing only for one purpose, that is what, matching concept. So all these Ram Kahani, all these Ramayanam, we are doing only for one point, that is to fulfill matching concept. So that matching concept is not avoided. And it is very much correct, sir. Because if you are aware about matching concept, it is very clear that expense should have corresponding revenue. Yes, here we are service providers, because as a service provider, I will be recognizing revenue, right? So in this case, obviously I'm the service provider. So service provider will have a WIP of services. And this is possible only in case of indivisible services. In divisible service, this is not possible. Why? Because you have a proportionate revenue recorded, and for that you have a proportionate expenditure recorded. So matching concept is not an issue at all. So matching concept is issue when expense is shown, but revenue is not shown. So that is why we do all this stuff. Right? I hope you're cleared with this. Shall we go ahead then? Anybody with any sort of query? Please ask. And if anybody wants to copy this down, I give you 2 to 3 minutes. Please copy it immediately. Yes, sir.
Sir, how we ascertain the value of WIP of services, sir? It is like a value, or it is something calculative, sir?
Sir, you know how much expense you are incurring for a particular project.
Yes, sir.
So you have the list of your expenses. And what is WIP? Total expenses incurred till date.
Yes, sir.
Right? So you know how much you have incurred on transportation, how much you have incurred on the food bills of your developers or your article assistant. You know what is their stipend. Right? So all those things, when you add up for 3 months, you are doing the services. So whatever expenditure you incurred for this particular audit, all the 3 months you add it together, that becomes your WIP.
Sir, all the expenses are incurred for the particular project or particular work.
Or that particular work or that particular service. Not all the expenses that you incurred in 3 months, only with respect to that service.
Yes, sir. Thank you, sir.
Welcome. So I hope you have copied this down. So now we'll go back again. Now somebody wanted to see the screen with respect to sale of goods. Now please take a screenshot of this. Somebody asked me for sale of goods. This is the screen, and this is for sale of services. Now in this screen, you can see entire sale of goods and entire provision of services. Right. So let us go ahead now. So before the break, we will complete till use of enterprise resources by others. Now, sir, when we talk about use of enterprise resources by other, I already gave you, I said you that we have certain resources of ours which we allow others to use. And since we allow others to use, they will compensate us. So they can either compensate us in the form of royalty or in the form of interest or in the form of dividend or in the form of rent, right? So we are going to learn how to recognize the revenue with respect to all these 4 points. But sir, whatever is the condition given, which one condition is always to be followed? Certainty of ultimate collection. If you are certain, then only record the revenue. If you are not certain, please don't record the revenue, postpone it. Right now, I am providing a service to you. I am providing a service to you. Right? So I will be recording the revenue only if I am certain about ultimate collection. Right? So technically, I am very much certain that I am going to collect from JKC. So today, when your lecture gets over, I pass a journal entry in the books of accounts for recognizing the revenue, because today's lecture, this part of lecture is completed. So this part of revenue is earned for me. I can definitely record the revenue because I'm certain. Now let us talk about royalty. Now everybody is aware about what is royalty. You have some patents, you have some copyrights with you, which you give others to use. For that, they give you royalty. So, sir, it is very simple. Royalty is recognized on accrual basis. Point number one. Royalty is recognized on accrual basis by considering the terms of the agreement. Royalty is recognized on accrual basis by considering the terms of the agreement. That is how the royalty is getting accrued. That is it, if it is in case of copyright, then is it royalty per book, or is it royalty on sales as a percentage on sales, or it is lump sum per annum? Some people say, I will take the rights of publishing your books for 3 years, and for every year I'll pay you 5 lakh rupees. So can I say every year 5 lakhs get accrued? So you can recognize 5 lakh lump sum per annum basis. But sometimes it is as a percentage on sales. So you have to wait for the entire sales of that enterprise. So whatever is the sales of that enterprise, on that sales, a particular percentage will be your revenue. So this is how you record royalty. On what basis? Accrual basis. So it is purely accrual basis, but you have to follow what? Revenue is recognized based on the royalty agreement by following what? Accrual basis. Yes, sir.
Yes, sir. You gave that book example now, sir. We should be waiting until the total sales is completed so that we can take a percentage on it. So what happens if because books books can be sold after many years now, sir. Still the books can be
No
sold.
problem, sir. Every year, sir. Every year to year we have to do, sir. You have to not wait for 5 years or 10 years together. I did not said that. It is always with respect to one financial year.
Okay,
So
sir.
if one particular financial year you have made a sale of 5 lakh rupees, so 5 lakh multiplied by a certain percentage, say 10%, so 50,000 revenue will be recorded in this year. Next year, say 10 lakh rupees of book is sold, so 10 lakh multiplied by 10%, 1 lakh of royalty should be recognized.
Okay,
Or
okay.
it can be based on quantity also. It can be based on quantity also.
Oh.
So whatever quantity sold during the year, that much royalty can be recognized. So no problem at all. You have to not wait for 5 or 10 years. That I did not say that. It is always with respect to one financial year.
Okay, sir. Okay, sir. Sir,
Right?
one more, sir.
Yeah.
After the royalty is over, after the terms and conditions are actually
Over.
the contract is over, still that the book got sold on the royalty given, sir.
Sir, if your agreement is over with the client, you will not give your rights to him, right? Further rights are not there. So practically they cannot sell your books anymore. If they are selling it, then it will be a crime done by them. You can sue them.
So after the contract is completed, they won't publish or they won't.
They will not publish. They will not renew your contract. So your book will not publish by them. Then you have to find another publisher who is willing to publish your books. But if your book is a good bestseller or not, why will they cancel the agreement? And if they're canceling the agreement, means your book is not doing a good sale. So there are various parameters of canceling, or you might not be a good person. You're always doing some problem with the company. So they will who wants to do business? I will not do business with you. I'll cancel your agreement. So you can find another publisher.
Yes, sir. Clear, sir.
Right? Okay. Now, next point is interest. Interest earned, sir, very simple. Always on time basis, that is accrual basis. So say, for example, you have made a fixed deposit in the month of December, right? So December to March is a time of 4 months. So technically 4 months of interest gets accrued in this year. So only 4 months of interest will be recognized purely on accrual, that is time basis, right? Dividend. Important, please understand, because a question can be raised over here. There are two types of dividend: interim dividend, final dividend. Final dividend is declared in the AGM. So final dividend is what you get on the AGM to AGM. That is annual general meeting. In every annual general meeting, the dividend is declared. But what is interim dividend? Sir, interim dividend is what you get between two AGMs. Between two AGMs, and it is always received between two AGMs. I would say that. So, sir, technically, the revenue from interim dividend should be recorded on cash basis. Interim dividend should be recorded purely on cash basis, that is received basis. When you receive it, record the revenue. When you receive it, record the revenue. I've written it over here. See, interim dividend recognized on received basis. But sir, there is a small problem with final dividend. Now, what is the problem? See what is written. Recognize the revenue when right to receive dividend is established. Right to receive is established. So when you have the right to receive the dividend, at that time you can recognize the revenue. But the next point is, when will you get the right to receive? Sir, when does the right to receive arise? Question mark. On the balance sheet date? No. When the dividend is proposed by the board of directors in the board meeting? No. Sir, it actually, you get a right when the resolution is passed in AGM. That is when the dividend is declared in the AGM. So when in the annual general meeting, Mukesh Ambani declares that Reliance is going to give you 50% dividend or 100% dividend, you can say that I am technically now established to receive the dividend. At that time, you can record the revenue from dividend, right? So the right to receive does not arrive on the balance sheet date. It does not arrive when the dividend is proposed by the BOD or in the BOD meeting. It arrives only when the resolution is passed in AGM, that is dividend is declared in the annual general meeting. And this is with respect to what? Final dividend. Because interim dividend, there is no problem. Interim dividend is recorded on receipt basis, right? But sir, here one small exception. And on this exception, a question can be raised. That is my gut feeling, because they can raise a question from this. What is the exception over here? Exception means these rules will not be applicable on this point. What is the exception? Holding company can recognize dividend income from a subsidiary company when the dividend is proposed. So if a holding company is expecting dividend from the subsidiary company, so holding company can immediately record the dividend when it is proposed in the board of directors meeting. So holding company will not wait till the resolution is passed in AGM. Sir, why? Because holding is only going to decide now how much dividend the subsidiary is going to give. And the subsidiaries board of directors are nothing but the common board of directors of your holding company only. So technically, why will a holding company wait till the resolution is passed? Because holding company is only going to decide how much the dividend subsidiary company has to give, right? So that is why this exception point is put. So what is exception point? Sir, holding company will recognize the, I will write over here, final dividend income, because for interim dividend, the concept remains same. So holding company can recognize final dividend income from a subsidiary company when the dividend is proposed. The dividend is proposed in BOD meeting, that is board of directors meeting. Correct? Last point, rent. Same, recognize on accrual basis, that is time basis. Right? I'll give you my example only. In Mumbai, we have 2 commercial properties that we let out. So one property we let out on 15 January this year. Because of COVID, 9 months the properties were completely closed down and there were no rent. But fortunately, we got 2 new clients. So one person took the possession on 15th of January and one person took the possession of 1st of February, that is 3 days back. So technically, when I talk about this financial year, that is 2021, from April to January 15, one premises was locked, means no rent earned, right? So now we will be earning rent only for 15 days of January, that is half of January, and February, March full. So in this year, purely on accrual basis, only 2.5 months of rent will be recorded. And the other property which got let out on 1st of February, as per accrual basis, only 2 months of rent will come here. Right? So for whatever part of the year your property gets let out, that much only rent you are going to collect. So that part of rent or that proportion of rent only will be recorded as your revenue. So that is purely on what time basis. Right? I hope you're cleared with this. Now for earning or for recognizing royalty or interest or dividend or rent, what is the prima facie condition that you have to fulfill? Certainty of ultimate collection. If the ultimate collection is uncertain, postpone the revenue. Is this point clear to you? Right? Now, one point before the break, uncertainty of collection that I've already discussed with you. What it says, if uncertainty existing at the time of sale, means at the time of sale or at the time of raising a claim from your customer, postpone, defer revenue recognition until such uncertainty exists. So if the uncertainty of collection is existing at the time of sale, please defer your revenue recognition. Please postpone that revenue recognition. Don't record it today. Wait, sir, wait till what time? Sir, wait till the uncertainty becomes certain. Wait till the uncertainty becomes certain. But sir, if it always remains uncertain, then sir, then you cannot wait for 5 or 6 years. Then you have to immediately write it off. You have to record the loss. Are you understanding this point? But sir, what if uncertainty of collection is arising subsequent to sale? Means sir, at the time of sale, the customer is superb, very nice. He takes credit from me and I sold goods to him. And there was not even a 1% uncertainty that he will not pay. I was 100% sure that he's going to make the payment. Fine. So I recorded my sale, right? But sir, after 1 month, he never picks up my call. First, his number was busy. Then his number was switched off. And now it says that the number is not in service only. Right? So technically, I know that I may not collect the funds now. So what should I do? Shall I cancel the sale? Shall I reverse the sale? No, sir. A recorded sale cannot be reversed. So what will you do? Sir, you have to create a suitable provision for doubtful debts. You have to create a suitable provision for doubtful debts. Means, sir, if the 50,000 rupees of collection is uncertain, then please create a RDD for 50,000. That is why I said create a suitable RDD. So what it is say, create a provision for the required amount, that is kind of RDD, or for the amount uncertain to be collected. So whatever is the amount that is uncertain to be collected, for that you have to create a reserve for doubtful debts. Right? So simple logic. Sir, to record a revenue, you should be certain for the ultimate collection. But if you are uncertain about the ultimate collection, don't record the revenue, postpone it to the future. Sir, till what time should I postpone? Till the uncertainty becomes certain. Right? But if it is never certain, it is always uncertain, then after one point of time, you have to record the bad debts loss. But say, sir, at the time of sale, it was 100% certain that collection will be made, super. But after that, if uncertainty arises, don't reverse the sale, don't cancel the sale, only create a provision for doubtful debts. Right now, some person told me to just once again explain this exception. Sir, it is very simple. It is very simple. Holding company will be recording the dividend of the subsidiary company once it is proposed in the board of directors meeting. Holding company will not wait till the resolution is passed, because sir, technically speaking, who is subsidiary? Sir, that subsidiary is nothing but a part of holding company. So holding company is only the decision maker. So holding company comes to know about the dividend directly in the board meeting only. So when they come to know in the board meeting only, and they only decide how much dividend the subsidiary will give, so why will they wait for the AGM? They will record it immediately. So this is the logic, and that is what is put as an exception. Please ask directly in the doubt solving, because now if you ask me and tell me to explain in doubt solving session, then I will not remember. So you have to ask it once again in the doubt solving session. Shruti. And see, there is nothing in royalty. There is nothing important in royalty. You just have to check royalties on what basis. Is it lump sum royalty or is it as a percentage on sale? Whatever is the agreement, on that basis, accrual. What is accrual? Whatever you have earned in a year, only that much has to be recorded. That is called as accrual. So if they say that there is a lump sum royalty, say your agreement is Jan to December, and they say 6 lakh rupees royalty per annum, fixed royalty. But your financial year is April to March. So technically in this year, only Jan, Feb and March, 3 years of royalty will be recognized. If say in Jan 21 you entered into an agreement, so technically Jan, Feb and March, only 3 months of royalty, 1,50,000 will be recorded in this year. But from April 21, what will happen? Your cycle will run from April to March. So full 12 months of royalty, that is full 6 lakh can be recorded. So it is purely on accrual or time basis. But check the agreement first. Whether it is as a percentage of sale, or it is lump sum, or it is on production, or it is on per product basis. You have to check that. Right? So technically, we have completed the chapter. Now, after the break, I have to discuss the revenue with respect to some special transactions. That is how to record the sale on hire purchase, how to record guarantee warranty sales, how to record consignment, how to record cash on delivery. These are the special transactions that we'll be discussing. There are some 14 transactions that we have to discuss and only one disclosure requirement. So after the break, we'll take around maximum 15-20 minutes to discuss all these things. After that, we can start with the questions. Right? So it is 8:35 now. You can go for your break for 10 minutes. Right? I hope everybody is back. Let us start with the next part of the topic. That is recognition of revenues in various situations. Very simple. These are all special transactions, and I thought we will cover this also because you can have a question raised from any of this part. Am I audible properly? My video is visible, right? And third, is my screen available? Okay. There is no background sound, Mr. Venkatesh. I'm sitting in a very cool and calm place. There is not even a voice of a single bird. So I don't know if you may have some disturbances with your headphones or something like that. Yeah, let us start. The first point, installment sales. Now that is nothing but hire purchase. Now, sir, hire purchase, what generally happens is you are purchasing a particular asset, definitely on loan basis, and the loan facilities are provided by the seller itself. So you have a HP price over here, hire purchase price, which is nothing but the cost price or cash price you say, plus the interest component. Means, say for example, you're buying a particular asset. The cash price means if you pay cash and you buy the asset, it is 5 lakh rupees. But if you take on hire purchase basis, obviously I will charge interest also because you're going to pay on installment basis, right? So cash price plus interest becomes HP price. Cash price plus interest becomes HP price. So what is the logic? The cash price part has to be recognized revenue as a sale of goods immediately when the risk and reward gets transferred. But the interest part will be recognized on accrual basis. Right? So the cash price part will be recorded on your normal sale basis. That is when the risk and reward is transferred. I give you an example that 5 lakh is the cash price. 1 lakh is total interest that we are going to charge. 5 lakh record now. 1 lakh on accrual basis. 1 lakh on accrual basis. And the same technique you will also learn in AS 19. So technically this is a part of AS 19 only, but since it is a special transaction, we have shown it over here also. Next is delivery of goods subject to condition, that lift example that I gave. Delivery of goods subject to conditions. Means if the conditions are we will get it delivered plus installed, or installation or inspection will also be done by us. So technically, the revenue from this sale will be recorded when the conditions are completed. And what are the conditions in this case? The conditions are installations or inspections will be carried on by us, by the seller. So when the proper installation is done, inspection is done, and when you give a clean report that everything is fine, after that you can recognize the revenue. Till that, revenue cannot be recognized, because your performance obligation gets over when installation or inspection is completed. Right? Point number 3, guarantee or warranty sales. Now, this is a very, very common type of sale which takes place in your day-to-day life. There is guarantee or warranty sales. And whenever you buy a mobile phone, it is backed up by 1 year or 2 years of warranty. Means if anything happens to your phone, there is a technical issue, the company will fix it for free. Now, Apple people, they replace the iPhone only. They give a new iPhone to you. But all others, they repair it and give it to you. Right? Or if it is irreparable, then they will give you a new phone. So technically what happens when the sales are made on guarantee or warranty basis, the sale has to be recorded immediately on the same logic of transfer of risk and reward. But sir, there is one condition that you have to create a provision for warranty claims that can come in the near future. Because if you are giving a 1 or 2 year warranty, there is a chance that some people will come and claim the warranty. And for that, you have to spend something from your pocket. So for that expenditure, you have to create a provision today. Because they can come in the near future after 3 months, or you are on 31st March, but somebody can come in the month of April or May for claiming warranty. So as on 31st March, you have to create a provision. And the provisions will be created on the basis of your past track records. How much warranty claims did you settle in last year? So on that basis, you can create the amount of same provision, or you can add some more depending upon if your sales have been increased or decreased accordingly. So what is the thumb rule? Sir, record the sale at the time of sale only, right? That is when the risk and reward gets transferred, but also create a provision for guarantee or warranty expenses as per past experiences, right? Consignment sales, you're already aware. The sale on consignment basis should be recorded when the goods are sold by the consignee. The sale should not be recorded when the goods are sent on consignment. The sale should be recorded when the goods are sold by the consignee. Then you will recognize the sale. Yes, sir.
Sir, in the guarantee or warranty sales, I have a small clarification, sir.
Yeah, please go on.
Yes, sir. Is this the companies like, for example, Reliance Digital selling fridges and ACs for guarantee and warranties, no, sir? Will
Sir,
they do?
it is not given by Reliance, sir. It is given by the company.
I can't get it, sir.
See, the warranty or guarantee is not given by the company. Sorry, it is not given by Reliance Digital. Reliance Digital will record the sale when his performance obligation is completed. And for Reliance, performance obligation is what? Delivering the goods, right? But you think from Samsung's point of view, who is going to give the warranty? It is Samsung who is going to give the warranty. So Samsung, when it sells to Reliance, Samsung, when it sells to Chroma, and then Chroma people will sell it to us, right? So Samsung will record the sales, right? And create a provision for warranty. It is not Reliance who is going to provide warranty. That additional 2 year or 3 year warranty that Reliance sells to you, that is a service that they are selling. Additional warranty they give. Now, Flipkart also gives 1 year of additional warranty. You have to pay 1,500. So that is given by a third party. So that warranty is never given by Samsung or LG. And for the third party, it is a service contract. So they will be recognizing it on the basis of provision of services.
Okay, sir. Clear, sir.
So please understand, this guarantee or warranty provisions will be created by the main company. If Apple is selling phones, Apple will create a provision, not the normal local mobile shop from where you are buying that phone, because he has to do nothing with the warranty. He will tell you, if anything happens, go to Apple Service Center. Right?
Clear, sir. Thank you, sir.
Welcome. Next is COD sales, cash on delivery. It is a very common thing nowadays. Many people order goods on cash on delivery. So technically, the sale will be recorded when cash is collected. Once cash is collected, you record the sale. Sixth point is very, very important. Delivery of goods delayed on buyer's request. No, sir, I am not aware what is she asking. If a person misses his phone within 2 months of purchase, will that can be claimed under guarantee or warranty? Madam, this question is not related to AS9. Now, how can I say that if you lose your phone, will the company will give you guarantee or warranty not? So that you have to discuss with the company. And one knowledge that I have, if you lose your phone, why will the company give you a guarantee? For physical damage, no warranties are given by any company. Sir, consignment point I did not give. I already explained consignment point. Sanjana madam, I already completed consignment. I told that the consignment sale will be recorded when the goods are sold by the consignee. It should not be recorded when the goods are sent on consignment basis. You have already learned in CA Foundation, right? So when the consignee sells the goods, after that you please record the revenue. Point number 6, very important. Questions have arisen from this point. Delivery of goods delayed on buyer's request. So when you are ready to give the delivery, but the buyer calls you up and says that, sir, please don't give delivery of the goods now. I am going to Tirupati for 5 days. You don't give the delivery now. Now, can I say you are in a position to complete your obligation, but you have been stopped by the buyer? So here, technically, whether the sale should be recorded or not, whether the risk and reward is transferred or not. Sir, the sale should be recorded. The risk and reward gets transferred if these two conditions are satisfied. Now, what are these conditions? First, the goods are distinctly identified and goods are ready for delivery on buyer's request. Means, sir, with respect to that buyer, the goods have been specifically identified by you. Means you have kept his goods aside and you are always ready for delivery. Means now he told postpone for 5 days. But he says tomorrow, calls you up and he says that, sir, my Tirupati program is cancelled. You please deliver it today itself. So you are in a position to deliver it. If these two conditions are satisfied, definitely you can record the revenue. Right? So what are the two conditions? Sir, if the delivery of the goods are postponed by the buyer, I will record the sale. I will say that the risk and reward is transferred if the goods are distinctly identified. Second, and I'm always ready for delivery on buyer's request. If these two conditions satisfied, go and record. Sir, in this case, then if you say that risk and reward is transferred, so what if the goods get damaged in the seller's godown? Who will take the responsibility? Seller or buyer? What do you think? These two conditions are satisfied. So you say that the risk and reward is transferred to the buyer and sale has to be recorded. But what if something happens wrong in your godown as a seller? Now I got an answer that buyer is responsible. Answer is absolutely correct. The buyer will be responsible if something happens to the goods in your godown. If fire takes place or there is a water logging, it will be the responsibility of the buyer only, not the seller. Because you told him, you please take your goods. I am ready to deliver. But he says that, please, you keep it with you. I am not in town. Right? So technically, the risk and reward gets transferred if these two conditions are satisfied. And two simple conditions. Separately, you have identified those goods. And second, goods are ready for delivery. Yes, sir.
Sir, in this delivery of goods delayed on buyer's request, I have a doubt, sir.
Yes, please go on.
Suppose we order a refrigerator, sir, and they say within 1 month after 1 month we'll deliver the refrigerator, sir.
Correct.
But within 15 days, it is ready for delivery, sir. Now the seller is calling the buyer, and the buyer is saying that no. After 1 month itself, the actual date itself, you deliver it, sir. Now, if some damages happen, who will be responsible, sir?
Is
Will
the billing done?
or the seller, sir?
Is the billing done?
Sir?
Billing done. Have you accepted the bill?
No, sir. They still didn't, sir.
Or have you made the payment yet?
No, sir.
Or only advance is made?
Advance only is made, sir.
Then, sir, it is not your responsibility.
Okay, sir.
Right. But one point I'll say that if the billing has been accepted, you have accepted the billing, the bill is already made, you have made the payment also, then sir, in that case, it is your responsibility because you are delaying the delivery. I'll give you an example. Yesterday only our new fridge was to be delivered, but we did not tell the Reliance people to get it delivered yesterday. I told them, you please keep it with you and deliver after 2 days. So basically today full day I'm in lecture from morning 7 to night 9. So today I don't have time. So I've told the Reliance Digital people to get the fridge delivered tomorrow because tomorrow I have lecture only till 2:30. So I gave them a time at 4 o'clock tomorrow. But technically nothing happens, sir. Reliance people are not that idiot people that they're going to damage my fridge. But second point, again, I'll tell you one thing, sir. Even if they damage the fridge, I will not accept the delivery. Because end of the day, it is buyer who will inspect it and then take. So this generally happens with normal sellers and buyers like you and me. Now, in case of Reliance and all, if the fridge is damaged, Reliance will not give me the delivery only. Reliance will not say the point that risk and reward is transferred because they want customers. But Reliance can do this with their suppliers, or their suppliers can do with Reliance. But Reliance will not do with a retail customer like you and me because retail customer will not accept. Even if a fridge comes with a scratch on it, I will not accept it. So when they get it delivered, I will open up the box. I will verify things. Is everything okay? Then I will sign yes, received with no damages. Okay. Even if there is a single small damage, I will return the fridge. That much power a retail customer has. Right? So let us go ahead with the next point now. Sale and repurchase agreement. Sir, I have already explained sale and repurchase agreement in the first lecture. So in the sale and repurchase agreement, you will not record the sale or purchase. Rather, you will record it as a loan and the interest will be recorded on accrual basis. If you remember this point, because sale and repurchase agreements are nothing but financial agreements and not a sale. So if it is a financial arrangement, so basically you have to record the interest purely on accrual basis. Right? Very simple point. Point number 8, sale on approval basis. This is also you have already learned in CA Foundation. Sale on approval basis. I'm not audible. Am I audible or not? Ankita, please check your speaker systems. I'm audible, madam. Sale on approval basis. What they say, you have already learned in CA Foundation. Sir, we should recognize the revenue on any of these two events, whichever is earlier. Any of the two events, whichever is earlier. One, the goods are accepted by the buyer, or the date of approval has been over, whichever is earlier. Means if you have given the buyer 30 days for approval and the buyer accepts within 20 days only. So on the 20th day when he accepts, that is earlier, 20th day or 30th day, whichever is earlier. So 20th day is earlier, you record the revenue on 20th day. But sir, up to 30 days, he has not given you any approval. So technically on the 30th day, when the time gets over, on 31st day, you can record the revenue. That is what you have learned in your CA Foundation also. Same point is coming over here. So what they say, sale on approval basis, recognize revenue earlier of on approval by the buyer or on expiry of the time period allowed for return. So whichever takes place earlier, please record your revenue. Right? Next is advertising income. So when will the advertising income be recognized by the company, those who are giving your advertisement? Say, for example, you have giving an article in Times of India. Your advertisement is to be printed in Times of India. So technically, when should Times of India recognize the advertising revenue? Sir, it will recognize the revenue when the advertisement appears before the general public. Right? So when the advertisement appears, on that day, the revenue can be recognized. I'll give you an example. On 15th March, you gave an advance of 5 lakh rupees for advertisement on 25th of March. 10 days before only you made the payment. So on 15th March, Times of India will treat it as an advance income and put on the liability side. And on 25th March, when the advertisement is printed in the newspaper and the newspaper is circulated everywhere, on 25th March, that advance will be recorded as an income. But sir, if 25th March program is cancelled by us and it is shifted on 5th April, so technically now the revenue should be recorded on 5th April. But sir, there is 31st March in between balance sheet date. So on 31st March, it will be recognized as an advance only. Income cannot be recognized. Because when the advertisement is appearing before the public, sir, 5th April, and 5th April falls in the next financial year. Right? So always stick to the basics. What is the basic? Advertising income can be recorded only when the advertisement appears before the general public. Once it is appeared, you are free to recognize your revenue. So even if you have received advance, it will not be recorded as a revenue. It will be put on the liability side as advance income. I hope you're clear with this point. Next is simple insurance agency commission. Say if you are an insurance agent, so you will be earning commissions on whatever new policies you sell or whatever existing policies renewal premiums are paid, on that you get commission. So generally insurance agent gets commissions on two events. First, on sale of a new policy. And second, when the existing policy is renewed, renewal premium you say, right? So when should you record the revenue? Sir, in case of renewal premium, you should record the commission when the policies are successfully renewed and the premiums are paid. After that, you can record your commission. But in case of sale of policy, you should be recognizing revenue when the policy is commenced. Because sometimes what happens, you sell a policy, but due to XYZ reasons, the policy is getting rejected by the insurance company. Maybe because you are overweight, so your premiums would be higher and you don't accept the premium. So you don't accept the premium, policy will be cancelled and they will refund your money. So technically, when the sale is made, when the new policy is sold, first wait till the commencement of policy. Commencement means the insurance company has accepted the policy. Once policy is commenced, after that you are free to recognize your commission as your income. And in case of renewals, once the renewal premium is paid, policy is successfully renewed, you can recognize your revenue. So what they say, insurance agency commission to recognize on effective commencement with respect to new policy or renewal of policies. So the policy is renewed, you can recognize your commission, and when the new policy is commenced, you can recognize your revenue. Right? Next point is subscriptions for publications. That is the magazines that you subscribe. Right? Yearly subscription, 6 monthly subscription, 2 yearly subscription. So here, how to recognize the revenue by that magazine company. So it says that point number A, if items delivered cost vary, means the subscriptions, those are delivered to you on every monthly basis. The cost of each magazine is different. So in that case, you have to recognize the revenue on the basis of sales values of the items delivered. So whatever is the actual sales value, on that basis, you will recognize your actual sales. But sir, if the cost of the items delivered is uniform, means every edition will cost you 100 rupees only. So in that basis, on straight line method, you can recognize the revenue. That is whatever subscription amount you receive divided by 6 months or 12 months, whatever is the subscription period, on that basis, equal amount will be recognized as a revenue every month. If the cost is uniform, but if the cost is not uniform, the cost of every edition changes every month, then in that case, whatever is the actual sales value of the items delivered, you have to record it as your sale. Right? Generally, questions don't come from here. Questions come directly from here. That is the major point. Point number 6, very important. Next, entrance fees for event. So Vijay, the actor, the next Saliva, he has got an event in Chennai and everybody is very eager for his event because he is going to dance in front of you. So you are going to watch his dance, right? So there is entrance fees for that event. You have paid the entrance fees. So the event organizer, when should he record the revenue? Sir, event organizer will record the revenue when the event takes place. So when Vijay will come and dance in front of you, after that that event organizer can recognize the revenue. But if Vijay is stuck in Chennai traffic, Vijay says that I am not able to reach, it is full traffic, and the event gets cancelled, revenue cannot be recognized, rather you have to refund entire money to the crowd. Right? So simple logic, entrance fees for event will be recognized only when the event takes place. Membership fees. Sir, what is membership fees? Life membership fees you pay or yearly membership fees you pay.
Sir, when you pay yearly membership fees, then it should be recorded on yearly basis only. That is on accrual. Means if 3 months of membership comes in this year and 9 months of membership goes in the next year, so on accrual basis, 3 months here, 9 months there.
Right, on yearly accrual basis. But sir, if it is a life membership fees, means once only the fees will paid for 20 or 30 years of life membership. So there, sir, AS9 has given record the revenue on the basis of life expectancy of the member. Now, how is that possible, sir? How can I expect anybody's life? Right, I cannot expect anybody's life expectancy. So AS9 says that, but I don't think so. People might be following this. So general common market practice is what, life membership, they defer over 5 years or they defer over 10 years. Right? They don't go and do a medical checkup and find out how much more years he's going to live. On that basis, I'll recognize the revenue. So that is basically nonsense. So we'll be recording, generally the standard market practice is 5 years or 10 years, you have to write it off. So if he has paid 50 lakh rupees, so over a period of 5 years means 10 lakh rupees revenue every year you will record. Or if you are taking it for 10 years, then 50 lakhs divided by 10 years, 5 lakh rupees per annum, you can record the revenue. That is the standard market practice. Next is tuition fees recognized over the period of instruction. Now you people have paid tuition fees for 2 JKSA classes, correct? And your period of instruction is January to September. But sir, problem is 31st March in between. The period of instruction is for 9 months, but January, February, March falls in this year. April to September falls in next year, right? So we will divide April, May, January, February, March, period of instruction, whatever we are going to complete in this year, we'll record here, and balance will be recorded in the next year over the period of instruction. But sir, it is never a problem with the May batch, because May batch starts somewhere in July or August and gets completed by January or February. So starts and completes in the same financial year. So it is not a problem. But for the November batch, it starts in one financial year and ends in other financial year. So then we have to divide the revenue over the period of instruction. So technically 3 months comes here, 6 months goes there. Right? Only one disclosure. Only one disclosure. And before going to this one disclosure, whatever 14 special transactions we learned and whatever technique they told us for recognizing the revenue, sir, with that, one condition is always free. And what is the free condition? Certainty of ultimate collection. So if it is certain, then only the revenue will be recognized. If uncertain about collection, revenue cannot be recognized. But there are some cases where you will collect first and then service will be provided with respect to entrance fees. You have to buy the ticket first and then Vijay will come and dance. So here uncertainty of collection is not possible. But still, stick to the basics. If you are certain for the collection, then you can recognize the revenue. Right? Only one disclosure requirement. What is the disclosure? If revenue recognition is postponed. If revenue recognition is postponed. Why it is postponed? So technically because of uncertainty of collection. The circumstances necessitating postponement should be made. So you have to write the reason why have you postponed. So basically there will be only one reason, uncertainty of collection. So you have to write in detail in the notes to accounts that a sale worth rupees 50,000 is not recorded because at the time of raising the claim, it was not certain that customer X is going to make the payment. Hence, it is postponed till further notice. So this is a small disclosure that you have to give. That's it. Only one disclosure requirement. Right. So here we complete with AS9 theoretically. And I think all the questions are already solved with us. So we have to discuss them now. Yes, sir.
Yes, sir. Here the disclosure says that if revenue is recognized postponed, the circumstances necessity postponement should be made now, sir.
Yes.
So let's say a person who defers the payment, a customer who defers the payment, we didn't record it. After that, he pays later on. What should be done, sir?
Revenue will be recognized, na, sir, because you have postponed the revenue because he has not made the payment.
right? And at the time of sale, are you certain whether you will be collecting or not?
At the time, I was sure, sir, that he will be paying me.
Sir, then it is not a case of uncertainty at the time of sale. It is case of provision for doubtful debts.
So then I should enter it as a bad debt and recover it as a bad debt recovered, sir.
You have to first see, it is called as bad debts recovery. So when he is not paying, you will record RDD, and if ultimately he is finally declined to pay, then you have to write off bad debts against the provisions for doubtful debts. And if tomorrow, after 6 months, he comes back to you that I made a wrong thing, I will make the payment, no problem. You recognize it as a bad debts recovery, not as a sale of goods. It will be recorded as a bad debts recovery.
Yes, sir.
Right? You cannot record a sale of good at that time because sale of goods was already recorded, and then bad debts was recorded, and now it is called as bad debts recovery. Right?
Yes, sir. Yes, sir. Thank you.
Now somebody is asking me, Ankita, can you please explain sale and repurchase? Sale and repurchase, madam, I have already explained in my first lecture itself. That is with respect to financial arrangement. Sale and approval, we will please talk in the doubt solving session. And you have already learned sale and approval in your CA foundation, if I'm not wrong. We'll discuss this in the doubt solving session. So Ankita, please write your doubt somewhere and please raise your query at 10 after the lecture is completed. Yes, sir.
Sir, sorry, sir. I didn't ask it in the complete flow, sir. Sir, actually, on consignment sales, the sale report will be given by the consignee, no, sir?
Yes, that is called as account sale.
Yes, sir. On the date of receiving the account sales, the consignor will record the sales, or on the typical time when he sells directly to the retailer, he will record the time, sir?
See, technically, when you receive the account sale, all the date and dates are given when did you make the sale. So accordingly, on those dates, you will be recording the sale. But you will wait for the account sales. And
Okay.
sir, in your tally, you have the option of putting backdated.
Yes,
So
sir.
not to worry. So means today, if it is 5th February, you can pass an entry dated 1st February. No problem.
Okay. Clear, sir. Thank you.
Right?
Sir, and one
So
more,
what
sir.
refers to commencement in case of commencement means when the policy gets started, when the policy gets into effect. That is
Yes, sir.
called as commencement of policy. Yes, sir. Next.
Yes, sir. I couldn't get the sale and repurchase point, sir.
Sir, it is first lecture, sir. Sale and repurchase. Please remember the first lecture. I sold my pencil for 7,000. I think I sold it to you only in the first lecture. And
Yes,
then I bought it back from you at 8,000. So that is the same point. 1,000 rupees is interest. So it is not a sale and repurchase. It is basically a financial arrangement.
Yes, sir.
So 1,000 will be recorded as an interest on accrual basis.
Yes, sir. Thank you, sir.
Right? Welcome. Now, if I talk about the questions of this topic, yeah, there are some 6 questions in this topic, and I think the solutions for all the 6 questions are given in the JKSC material itself. And where the solution is not given, I have copied the solution in my notes, and I think all the solutions are given because question number 6, the solution is given within the beneath the question itself. See, in question number 6, from here the solution starts, and for all the 5 questions, solutions are given if I'm not wrong. So let us start with the questions of AS9. Right. So let us start with the first question. Achha, before first, we'll go for the simpler questions. Yeah, we'll start with question number 3 first. Please come to question number 3 first. I'll complete the simpler ones first. What it says, X Limited has recognized 10 lakhs on accrual basis income from dividend on units of mutual funds of the face value of 50 lakhs held by it as at the end of the financial year 31st March 2003. The dividend on mutual funds were declared at the rate of interest, at the rate of 20% on 15th of April 2003. Dividend got declared on 15th April 2003. And these people have already recorded the dividends as on 31st March 2003 on accrual basis, right? The dividend was proposed on 10th March 2003 by the mutual fund company. Whether the treatment is as per the relevant accounting standard, and you are asked to answer with reference to the provisions of the accounting standard. Now, sir, the dividend got proposed on 10th of March but got declared on 15th of April. You recorded the dividend on 31st March. Is it correct or is it wrong? It is absolutely wrong. Because, sir, we learned with respect to final dividend that the dividend should be recorded when it is declared by the company. So basically 15th April they have declared means the AGM might have took place on 15th April when they declared it. So technically when you record it on 31st March, it is wrong. So technically the dividend should be recorded on 15th April 2003, that is in the financial year 3-4. In the financial year 3-4 and not in the financial year 2-3. Right? So in this situation, the first provision that you will write as per AS 9 revenue recognition, you will write the provision with respect to dividend income recognition. So you have to write the full point that the final dividend can be recorded as a revenue when the right to receive is established. And the right to receive is established when the dividend is declared by the company in AGM. And in case of interim dividend, it should be recorded on receipt basis. So this is the first provision that you will write. And then we'll answer the given situation. That since the dividend is declared on 15th April, so it has to be recorded on 15th April 2003, that is in the financial year 3-4. The company has recorded it on 31st March, which is not a correct treatment. Right? So let us have a look at this solution. Simple question. Have a look at question number, answer to question number 3. And this is a solution which is already printed. Now again, as per paragraph numbers and all are not required. I already told you that these are not required because you are not in a position to buy out all these things. So you can directly write as per accounting standard 9 on revenue recognition states that dividend from investment in shares and securities are not recognized in the statement of P&L until a right to receive payment is established. Right? So you will record it only when the right to receive payment is established. In this case, the dividend is proposed on 10th March, while it is declared on 15th March 2003. 15th April 2003, I'm sorry. Hence, the right to receive payment is established on 15th April 2003. As per the above mentioned paragraph, income from dividend on units of mutual fund recognized by company X Limited in the financial year ended 31st should be recorded in the financial year ended 31st March 2004. That is in the next year. The recognition of 10 lakhs on accrual basis in the financial year 2-3 is not correct as per AS 9. So technically, when the right to receive is established, that is 15th April 2003, and 15th April 2003 falls in the financial year 3-4. Falls in the financial year 3-4, so it should be recorded in the P&L account as on 31st March 2004 and not 31st March 2003. So the treatment given by the company is not correct. The standard solution is absolutely perfect. No need to make any changes. The same solution can be put by you. Right? Anybody with any sort of query with question number 3? I think it is pretty clear and it was very simple as well. Right? So what I would suggest is once your lectures are over, please note down the solution once again in your notebook. I know it is there in the material, but once you copy it so that revision will automatically be done. I'll go for the next question. We'll go for question number 4. Question number 4. Audit says, the board of directors of X Limited decided on 31st March 2007 to increase the sale price of certain items of goods sold retrospectively from 1st January 2007. As a result of this decision, the company has to receive 5 lakh rupees from its customer in respect of sales made from 1st January 2007 to 31st March 2007. But the company's accountant was reluctant to make up his mind. So you are asked to offer your suggestion. Now, can a company retrospectively hike its prices for the goods which it has already sold or the services which it has already provided? Can it do so? Sir, definitely yes. Why not? The company can do it. It's company's decision. But as a customer, are you going to pay or not? That is your lookout. Company can do that. Company can retrospectively change the prices. They can hike their prices. But the point is, will it be in a position to recover it from the customer or not? That is a question mark. So this question, accountant says that no boss, this should not be done. 5 lakh rupees of revenue should not be recorded. But still they are asking for your suggestion. Now your suggestion will be not your personal suggestion. It will be as per the relevant standard AS9. And what would your suggestion be, you know? The revenue should be recognized if you are certain about the ultimate collection at the time of raising the claim. But sir, if you are uncertain, postpone the revenue. So you have to give both the possible options over here because nobody is asking your personal opinion. I said you have to opine as per the relevant standard. And AS9 says that a revenue should be recorded if at the time of raising the claim. So when you raise the claim of 5 lakh from your customers, and if you are certain about the ultimate collection, go on and record the sale of 5 lakh. Additional revenue of 5 lakh you record. But sir, if at the time of raising sale, your customers are not willing to pay you, they said, no sir, we will think about it. How can you raise a claim? We will not pay, blah, blah, blah. In that case, you are uncertain. Please postpone the revenue. Please postpone the revenue. Right? So here our first paragraph will be talking with respect to certainty of collection. And second paragraph, we will have to give a dual answer that if the company is certain, record the revenue. If not certain, postpone the revenue. Right? So let's have a look at question number 5. Sorry, it was question number 4, no, if I'm not wrong. Yeah. As per para 10 of AS9, so para's number is not again required. So as per AS9 revenue recognition, the additional revenue on account of increase in sale price with retrospective effect as decided by the board of directors of X Limited of rupees 5 lakh to be recognized as income for the financial year 6-7 only if the company is able to assess the ultimate collection with reasonable certainty. So you have to record only if ultimate collection is reasonably certain. If at the time of raising of any claim, it is unreasonable to expect the ultimate collection, means you are uncertain about the ultimate collection, revenue recognition should be postponed. So technically dual answer is given. Both the possibilities are given in the question. If at the time of raising claim, you are reasonably certain that you're going to collect, please record the sale. That is 5 lakh rupees revenue, you please record. But if at the time of raising claim, you are uncertain whether the funds will be collected or not, please postpone the revenue. And sir, 99% you have to postpone the revenue because I don't think so anybody will accept. Now you have paid an XYZ as fees, and if tomorrow people say that you have to pay 10,000 more, retrospective effect, will you pay? Majority of you will not pay. Stating that, sir, we have already joined the class because of this amount of fees. Now, if you ask 10,000, we will not pay. So they have to accept it. They don't have an option because that is their mistake. They might have calculated the selling price wrong. So even if a company has all the powers to retrospectively increase their sale price, but whether to pay or not is the customer's discretion. Right? I hope you're clear with the 4th question. The 6th question is also on the similar grounds. The 6th question is also on the similar grounds, and the solution is given exactly beneath the question only. So let us read question number 6 first. What it says: Arjun Limited sold farm equipments through its dealers. One of the conditions at the time of sale is that consideration of payment in 14 days, and in the event of delay, interest is chargeable at the rate of 15% per annum. So basically, Arjun Limited, when sells farm equipment, let us take tractors. So if Arjun Limited is selling tractors to its dealers, Arjun Limited is giving only a 14 days of credit. Right? 14 days, you have to make the payment. If 14 days are over, from the 15th day, whatever is your outstanding amount, on that we will charge 15% interest per annum.
Okay, no problem. That is your policy. You can make policies. You are free to make such policies. The company has not realized interest from the dealers in the past. Sir, as on today, none of your dealer has ever paid you any interest. Nobody paid interest to you. However, for the year 31st March 2015, that is current year, it wants to recognize interest due on the balances due from the dealers, and the amount of interest is ascertained at 9 lakhs. Decide whether the income by way of interest from dealer is eligible for recognition of revenue as per AS9. Do you think the 9 lakh rupees of interest should be recognized? Because they are saying whatever is the outstanding from the dealers, on that basis, we have calculated 9 lakh of interest. So obviously interest is calculated on accrual basis. Correct. But now they are asking whether should you recognize this 9 lakh. One answer I got, sir, it is uncertain. Now the answer that I got uncertain is because till today I never collected interest. So sir, what is the possibility that you are going to collect it in the future? So still it is uncertain. Right? So the claim should not be raised. The claim should be raised only if you are certain about collection. But your past experiences says that you have never collected a single penny from your customers. So technically speaking, revenue cannot be recognized. But one point we will write, if the company is certain, then they can recognize. So let us have a look at the answer, very much similar to the earlier question. As per AS9, where the ability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim, the revenue recognition is postponed to the extent of uncertainty inverted. So revenue recognition is postponed to the extent uncertainty is inverted, means uncertainty becomes certain. Till that time you have to postpone. Once it is certain, then you can record the claim. So this first paragraph from here to here talks about revenue recognition, that is with respect to certainty of collection. Then they say in such cases, the revenue is recognized only when it is reasonably certain that the ultimate collection will be made. In this case, the company never realized interest for the delayed payments made by the dealers. So they never collected. Hence, it has to recognize the interest only if the ultimate collection is certain. The interest income, hence, is not to be recognized. So we have given dual answer. First, it should not be recognized. And one more answer we give, it can be recognized only if the ultimate collection is certain. Right? Any query with question number 6? Yes, Mr. Naveen.
Sir, in the same question, if they have given that for the previous years, they have received their interest, but now for this year alone, if they have not received, means we can say that it can be recognized, no, sir?
Yes, sir. If till today you have already collected many a times, if many a times you have collected interest from your customers, so on that basis you can definitely record the interest because it is the ultimate collection is certain. But there may be a chance that some may not pay. So at that time you can definitely record a bad debts for that, or you can recognize a provision for doubtful debts accordingly. Okay. But at the time of raising claim, it is certain that you're going to collect because your past experiences say that you have collected.
Collected, yes, sir. Okay.
Right? Okay, so we have done question number 3, 4, and 6. Now we'll go for question number 2. Question number 2. What is question number 2 stating? Y Company Limited used certain resources of X Company Limited. In return, X Company Limited received 10 lakh rupees and 15 lakh rupees as interest and royalties respectively from Y Company Limited. During the year 5-6, you are required to state whether and on what basis these revenues can be recognized by X company as per AS9. So, sir, first you have to tell that how will interest and dividend be recorded? Interest and royalty be recorded in the books of accounts. That is as per the provisions given. Interest will be recorded on accrual basis, and your royalty will also be recorded on accrual basis, but depending on the conditions of the agreement. Right? So let's have a look. Simple question. I hope such questions come in exam. That will be a jackpot for you. So as per AS9 revenue recognition, revenue arising from the use by others of enterprise resources yielding interest and royalty should only be recognized when no significant uncertainty as to measurability or collectability exists. So that is the common rule that applies everywhere, that there is no uncertainty of ultimate collection. But these revenues should be recorded on following basis: interest on time proportion basis, taking into account the amount outstanding and the rate applicable. right? So whatever is the outstanding amount of loan multiplied by the rate of interest multiplied by the time period, 6 by 12, 3 by 12, 9 by 12. So that is called as accrual. And royalties on accrual basis in accordance with the terms of the relevant agreement. Right? So very simple question. Yes, Naveen, you want to ask a doubt? You have raised your hand.
Sir, no, sir, that I forgot to lower my hand, sir.
Okay, no problem, no problem. So it was a simple one, question number 2. Very simple question. So now 2 more questions to go. We'll go with question number 1 first. Question number 1, what it says, Messrs. Prima Company Limited sold goods worth 50,000 to Messrs. Y and Company. Y and Company asked for a discount of 8,000, which was agreed by Messrs. Prima Company Limited. Sale was effected and goods were dispatched. Okay. After receiving the consignment, goods worth rupees 7,000 are found defective, which were returned immediately. So technically 8,000 rupees was the discount asked at the time of sale. So can I say this discount is considered as a trade discount? Because there are 2 types of discount, trade discounts and cash discounts. Trade discounts are not recorded in the books, only their effect is given. Effect is given means what? Sale less trade discounts, whatever is the net price is recorded as a sale. And if it is a cash discount, then it is your expenditure and that expense is recorded in the P&L account. Right? And when the goods are returned, defective goods are returned by the customer, these are called as sales return. Right? If we have made a sale and there are some defective items, it would be returned by the customer. So it is called as sales return. So technically sales return is always accounted separately. It is never recorded directly in the sale by reversing the sale. No, we record sales return separately in the sales return account. So it is accounted basically separately. What it says, the payment of 35,000 was made to Prima Company Limited. So obviously, sir, 50,000 was the selling price, 8,000 was the discount, and 7,000 is sales return. So 8 plus 7, 15,000. So out of 50, 15,000 is gone. Net 35,000 payment is made. Right? But what did the accountant do? The accountant booked the sales for directly 35,000 only. Please discuss. So can I say technically he is wrong? Because he collected 35,000 from the customer. So he recorded directly 35,000 as the sale, which is not correct. So technically what he should have done is, he should have recorded the sale for 42,000. That is 50,000 minus 8,000 of trade discount and recorded the sales return of 7,000 separately. This is the correct treatment that he could have done. Because what is the definition of revenue? The definition is gross inflow of cash or receivables that you earn in the ordinary course of business, and it is always subject to deduction of trade discounts. But sales returns and all cannot be directly adjusted in your revenue. It has to be recorded separately. So let's see what solution is being provided to us. Now, sir, the first paragraph. Now, this question is with respect to how much revenue should be recorded. So the first paragraph over here will be with respect to the definition of revenue and what is included and what is excluded from revenue. That is what you have to write in the first paragraph. So here I will first define the define revenue, and then I'll say that trade discounts and sales return will be accounted separately, and revenue should be recorded net of trade discounts. Right. So what it says, as per AS 9, revenue is the gross inflow of cash, receivables, or other considerations arising in the course of ordinary activities of an enterprise from the sale of goods, rendering of services, and use of enterprise resources by other, yielding interest, royalty, dividend, and revenue should be recorded net of trade discounts, if any. So this is the basic definition of revenue that I have put. Then comes the given situation. In the given case, Messrs. Prima Company should record the sales at a net value of 42,000, that is net of trade discount of 8,000 in price, and goods returned worth 7,000 are to be adjusted by recording sales return separately. Messrs. I think the answer that is printed in JKSC material is a bit different. I have changed the solution. So I want you people to take a note of this solution, because the solution given over there is too lengthy and a bit points are not that clarified properly. So I've changed the solution accordingly. So please have a look at my solution. Then you can take a note of this. Now what they say, you have to record the sale at 42,000, that is net of trade discount of 8,000 in price, and goods returned worth 7,000 are to be adjusted by recording the sales return separately. Messrs. Prima Company Limited might have sent the credit note of 7,000 to Messrs. Y Company to account for this adjustment. Now 7,000 credit note might be sent to account what? To account the sales return. So when a sales return is accounted, a credit note is issued by the seller to the buyer. The contention of the accountant to book the sales of 35,000 is not correct. Note, discount of rupees 8,000 is treated as a trade discount. Because if you treat it as a cash discount, then your sale will be recorded at full 50,000. Are you understanding my point? When trade discounts are given, you first subtract it from the gross selling price, and then whatever is the net price you record it. So here I'm considering it as a trade discount. But if this is a cash discount, then sale will be full 50,000 rupees and 8,000 should be recorded as discount allowed. Right? So please take a screenshot of this, because this is a different solution from your solution printed in the material. So you have to record this solution in the exam, and you will write a final note also at the end that the discount of 8,000 we have treated it as a trade discount. Your solution will change if you treat it as a cash discount. So what part of the solution will change? Sir, here I will write 50,000 will be recorded and credit note will be sent for total 15,000. That is 7,000 for sales return and 8,000 for cash discount. Fine. We'll go for the last question of the topic. This is a very, very good question. And this had come in the institute exam as well. This is a very, very good question. And this is based on a point which I have already marked it as important. A Limited entered into a contract with B Limited to dispatch goods valuing rupees 25,000 every month for 4 months upon the receipt of an entire payment. B Limited accordingly made the payment of rupees 1 lakh and A Limited started dispatching goods. So payment is already made in advance. 1 lakh rupees payment is made, and A Limited has also started dispatching 25,000 rupees goods every month. And what happened in the third month, due to a natural calamity, B Limited requested A Limited not to dispatch further goods until the further notice, though A Limited is holding the remaining goods worth 50,000 ready for dispatch. A Limited accounted 50,000 as sales and transferred the balance to advance received against sales. So since 2 months of deliveries I have done, so he has recorded 50,000 rupees as sale, and balance 2 months delivery is postponed by the buyer. So what did A Limited do? A Limited has recorded it as an advance. Comment upon the treatment of balance amount, means the 50,000 balance amount which is transferred to the advance account. You have to comment upon that with reference to the provisions of AS. So what do you think is whether the accountant is correct or not? Whether the accountant is correct or not, whatever the treatment given is right or wrong. Some people say, sir, no, it is not correct. Ganesh says it is correct. Not correct, correct. So if it is correct, Mr. Ganesh, we'll go for the not correct people, because correct hai to no problem. Whatever is done is fine. But if it is not correct, then why it is not correct? Can anybody give me an answer for this? Why it is not correct? And if it is not correct, what should be the situation then? It must be recognized as 2 conditions are satisfied. Vedavali, what are the 2 conditions satisfied? Can you please raise your hand and answer directly? As it is ready for delivery. Okay, yes, yes, madam. Please answer. Yes.
Sir,
Yes.
goods are identified separately and also it is ready for delivery.
Correct. So we should record that 50,000 as sale now.
I think, sir.
Okay, so you say that it should not be put as an advance because the conditions are satisfied that the goods are separately identified. It is ready for dispatch, means ready for delivery.
Yes, sir.
You're absolutely correct, madam. You have to refer that point number 6 when delivery is delayed by the buyer's request. So here it is the same situation. 50,000 rupees worth of goods are delayed by the buyer because in the third month he has delayed, right? So we have taken it very simple that third and fourth month both are delayed because further information is not properly given in question. And they clearly say that 50,000 is put in advance. So it is obviously they are talking about 2 months only. Because student raised a query, sir, what about the fourth month? Sir, question is clearly given that 50,000 we have recorded as an advance. Right? So technically 2 months there is a problem. So here what will I say? The treatment given by the accountant is not correct. It is wrong. Because the accountant should have recorded it as a sale because both the conditions are getting satisfied. Condition number 1, it is clearly A Limited is holding the remaining goods. Holding the remaining goods means what? He has separately identified it. And he is ready for dispatch. Ready for dispatch means he can deliver it at any point of time. Right? So here, the treatment given by the accountant is not correct and it is not with reference to AS9. So the accountant should have recorded the entire 1 lakh rupees as sale. 50,000 is already recorded and balance 50,000 also it should have been recorded as a sale. Right? So let us go with the solution. Point number 5. Now what it says, as per AS9, in case of sale of goods, the physical delivery is not important. Just a minute. Huh? Yes, madam. Do you have a doubt, Vedavali? You have raised your hand. Okay, fine. So what they say, in the case sale of goods, the physical delivery of goods is not important for revenue recognition. What is relevant is the significant transfer of risk and reward. Where the delivery is delayed at buyer's request and buyer takes the title, accepts the billing. Revenue should be recognized notwithstanding that the physical delivery has been completed so long as there is very expectation that delivery will be made. Now, please understand over here that the revenue is recognized because if the buyer has accepted the title, right, and he has accepted the billing, the revenue can be recognized notwithstanding anything that the physical delivery is not yet made. However, the item must be on hand, identified and ready for delivery to the buyer at the time the sale is recognized, rather than there being simply an intention to acquire or manufacture the goods in time for delivery. Means the point is, when the goods are delayed by the buyer, you should be actually holding those goods in hand. Means you say that no sir, no problem, it is there with me, means I will get it from somewhere or I will manufacture and I will then send it to you. So in that case, I will say that goods are not in hand with you. So you cannot record the revenue. Goods on hand means technically you have identified those goods. Yes, these are those goods. If you even tell me to deliver after 2 hours, I can deliver it right away. If that is the situation, then the revenue can be recognized. So what they say here in this case, on the request of B Limited, goods worth 50,000 ready for dispatch but are held with A until further notice is received from B Limited for its delivery. Therefore, A Limited will recognize 50,000 as its revenue for that period and not as an advance. Right? So it cannot be recognized as an advance anymore. What if the company has received only 50,000 at the beginning in this case? Madam, no problem. Even if company has received only 50,000, balance 50,000 is still receivable from that company. Still revenue can be recognized. Because what is the definition of revenue? Revenue is gross inflow of cash or receivables. So it will become 50,000 as a receivable amount. Because the topmost priority over here will be what? Risk and reward is transferred because the billing has been accepted. Even the payment is not made, but billing has been accepted. He has accepted the goods of rupees 1 lakh. Right? And we are ready for delivery. We are not just showing that we are going to make the delivery. Right? See, there is a difference between we are ready for actual delivery and to do a show off of delivery. There are many people showing, sir, now the tempo will come. You please check. After 2 hours, tempo will come. No, sir, go and check in your balcony. The tempo might be standing beneath your society. There are many people doing such type of bluff. So here when I talk about delivery means we are ready with giving an actual physical delivery, right? And we are holding the goods. Then only I can recognize the revenue. Yes, it will be shown as an asset, as a receivable, that is a debtor on the balance sheet side then, asset side. Yes, Shruti is correct. Right? So this question is covered with that sixth point. And this question had come earlier in exam. So please mark this question as very important and do refer this question once or twice at least before your exam. Right? So here we technically complete with AS9. Right? So what will now we be doing is we will be starting with AS13. And by today itself, once the lecture is over, I will immediately message the timetable department to please upload AS13 immediately in your summary notes folder. AS summary notes folder is there, right? I'll tell them to immediately upload AS13. So today, after the lecture, by today only, you will get the notes available. So you can download them with you. Somebody asked me one doubt over here. What is it? Sir, what if B says to hold the goods, but B still send the good and goods are destroyed in natural calamity? Then who is responsible? Madam, here A is going to send the goods. Now, sir, if I have delayed the goods, if I have delayed the delivery, why will you send the delivery by purpose? Sir, such business is not done. If I am delaying the delivery and giving a reason that I'm not available, then why will you send the delivery? And even if you send the delivery, who is there to accept? Now, if you send the delivery and accident takes place, it is your responsibility then. Because I never said to deliver the goods. And if something happens, like he said, natural calamity, accident took place, and all goods are damaged, it will be the responsibility of the buyer only, of the seller only. Because these are goods lost in transit. If it is damaged in the godown of the seller, then it is buyer's responsibility. Right? So I hope with you are clear with point number 5. Question number 5 is done. So now we will not waste any further time. 15 minutes are left with us, so we can go with AS13. So we can complete at least the objective part, the investment definition, and at least the scope part. The 3 points we will try to complete today: objective, investments definition, and scope. Right? And tomorrow we will be again continuing with AS13 only. Tomorrow, as in whenever we have lecture. I think we have a lecture on Monday, if I'm not wrong. Then. Right? We have a lecture on Monday, so we'll be continuing it on Monday. Now, what is AS13? Sir, it is accounting for investments, where you are going to learn in detail the accounting treatment of investments. And if I'm not wrong, you might have already completed a chapter in your accounts for investment accounting, right? But again, we are going to do this as an accounting standard, because your chapter is nowhere but coming from AS13 only. Now, please understand, AS13, accounting for investments, it is applicable to all the 3 levels of entities. It is applicable to all the 3 levels of entities, right? And the objective, first we will discuss. It prescribes the accounting treatment, that is recognition, measurement of cost and NRV of the investments, and it also prescribes the carrying amount of investments on the balance sheet date. So, sir, here we are going to learn the in and out accounting treatment of investments. What are the recognition criteria? What are the measurement? That is how to how to measure the cost of your investments, plus how to value the NRV. NRV we have already taught in AS2. So again, I will not be talking about NRV because the formulas remain the same. Estimated or expected selling price minus expected selling expenses. So NRV formula remains the same. So here our major attention will be how to measure the cost of the investments. That is point number 1, which is very important. And secondly, on the balance sheet date, the investment should be carried at what value? That is another important point that we are going to learn. Means, for example, you have purchased investments on 15th of December. Say, for example, on 15th December. So on 15th December, there will be an initial recognition. Initial recognition means on 15th December, investments will be recorded in the books of accounts, and initial recognition will always be at cost. So how to calculate the cost of investments, we are going to learn in AS13. Correct? Now, after 15 December, you purchased, you recorded in the balance sheet at cost. On 31st March, there will be a subsequent recognition. Subsequent recognition means on 31st March, Now you have to decide whether the investments which you have recorded should be shown at cost or any other value. Generally, it is cost or NRV, whichever is lower. The same point as you have in inventories. So as on 31st March, you will again decide what will be the carrying amount of investment. Should it be carried at cost only, or should it be valued at NRV? Because if it is valued at cost, no problem, because earlier also you recorded at cost and you are not keeping it at cost. But what if the NRV is less than cost? So you have to go with NRV. And the loss has to be recorded in P&L account. Right? If the cost was 100 rupees and now NRV comes to 80 rupees. So you have to bring down the value of investments to 80 rupees. So if you bring it down to 80 rupees, then what will happen? 20 rupees will be a loss to be debited to profit and loss account. Correct? So that is what you will be learning over here. So this is the basic objective of AS13. It's a very interesting accounting standard. And this is a Group 1 accounting standard. I'm really sorry. It is a Group 1 accounting standard. So I'll write it over here, Group 1 accounting standard, and applicable to all the 3 levels. And in exam, you are practically, in exam, you will find all the practical questions coming from this accounting standard. Right? Now let us understand what do you exactly mean by investments. Now, sir, I'll talk in a layman's language, in a very simple language. Sir, investments are your assets. Investments are your assets which you have held only for the purpose of earning revenue out of it. Investments are your assets which you hold only for earning revenue in the form of interest, dividend, rent, and capital appreciation. So, sir, interest we earn from bonds, debentures, right, and certain government securities. Dividend we earn from equity and preference shares. Rent we earn from our properties, land or building. Capital appreciations, that is capital gains, you can earn it in gold, silver also. Gold, silver are also investments only. You invest in gold, you invest in silver for what? For capital appreciation. Because you buy for 30,000 rupees for 10 grams and now the rate is 47,000. 17,000 rupees is your capital appreciation. These capital appreciation also comes in respect of shares which are listed on stock exchanges. Now, I told you yesterday, I bought Sun TV at 534 rupees and yesterday's closing price was 548. So I earned 15 rupees per share. That is capital appreciation. So I trade in shares for 2 things. One, to earn dividend, and second, to earn capital appreciation. I invest in land and building. I invest in land and building for earning 2 things. First, what? Sir, rent. And second, capital appreciation. Right? First, to earn rent, because if I have a property, right? If I have a property, I'll rent it. I'll earn rent from it. And second, the value of my property also rises. Now, 8 years back, we purchased a house for 50 lakhs. And after 8 years, the value is now 1.2 crores. So 70 lakh rupees is capital appreciation. Plus, for 8 years, whatever rent I have earned. So the land and building that I hold is my investment. Now you will say, sir, land and building is also investment. Sir, we thought only shares and securities are investment. Yes, land and building are also investments and they are called as investment properties. They are called as investment properties. IP we call it, investment properties. Because generally people think investment is what? Shares, securities, bonds, mutual funds, recurring deposits, fixed deposits. These are investments. You're absolutely fine. You're absolutely correct. But land and building is also investment. Right? I hope you're cleared with the definition. So I'll read the definition once. Investments are assets held for earning revenue from it in the form of interest, dividend, rent, and capital appreciation. Example, equity share, preference share, bonds, debentures, land and building. I can write gold, silver, or any kind of precious metals, diamonds, everything can be covered if you're an investor in that. Right? Now let us discuss the scope. That is, what is not covered by AS13. Sir, see, it is applicable to all the 3 levels. It is applicable to all the 3 levels and there is no question in it. But there are these 4 or 5 transactions where this AS is not applicable. Right? What are these transactions where this accounting standard is not applicable? And sir, whenever you find a scope with 5-6 points, you can definitely expect a 5-mark question from there. You can definitely expect a 5-mark theoretical question from here. So which are the areas where it is not covered? So point number 1, it does not prescribe the accounting for incomes earned out of these investments. Sir, because incomes earned out of these investments, we already learned 2 hours back in AS9. How to account interest, how to account dividend, how to account rent. We have already learned where in AS9. So AS13 is silent. AS13 simply says that I will give you accounting treatment for investments. But the revenues that you earn out of these investments, I don't give the treatment. It is generally given by AS9 only. Right? Point number 2, investments under leases. Investments under leases are covered by AS19. I'll give you a simple example. Sir, I am a leasing company and I lease aircrafts. I lease aircrafts. So I have to purchase aircrafts first and then give it to lease to various airline companies. So when I purchase those aircrafts, that is called as my investments made in lease. And that will be accounted as per AS19. I will teach you in AS19 how to account investment in leases. Right? So that treatment I'll be teaching you in AS19. So AS13 is not applicable on it. Right? So whenever you are investing for leasing it, you will be accounting it as per AS19. See, renting and leasing is different. Renting is generally for a short period, but leasing is for a very long period. Right? So leasing will be covered in AS19, and when you rent land and building, it is as per AS13 only. But when you are leasing a land and building for long term, then it can be covered under AS19, because land and building can be given for lease. Generally, land is given for lease for 50 years or 99 years. Right? So it will be covered by what? AS19. Very, very important point. Point number 3, very important. Investments of banking companies, insurance companies, asset management companies, that is the mutual fund companies, venture capital funds, non-banking financial companies, and financial institutions. For these, AS13 is not applicable. Means if you are a bank and you are holding some investments, that is, you might have investment in shares or government securities, whatever it is, you will not follow AS13. Why? Banking Regulation Act and RBI guidelines. Sir, you are an insurance company and you hold investments. You are an insurance company, you hold investments. AS13 not applicable because IRDA guidelines are there. You are a mutual fund company, means you are a company who is issuing mutual funds to general public. So as a mutual fund company, you invest somewhere because out of that you will pay your clients your dividends. So when a mutual fund company is investing somewhere, AS13 is not applicable because they have to follow the SEBI guidelines. But sir, I am a normal retail investor and I have mutual funds. For me, AS13 is applicable. Right? But say I have Kotak mutual fund with me. So for me, AS13 is applicable. But think from Kotak mutual fund company. Kotak mutual fund company also might have invested in shares or securities of others, because when I pay Kotak, Kotak will invest somewhere, and whatever Kotak earns, they will give me appreciation. So when Kotak is investing, Kotak mutual fund is investing in various securities, AS13 is not applicable. AS13 is not applicable. They will follow the SEBI guidelines accordingly. But when me as an individual investor is holding Kotak mutual funds units, for me AS13 is applicable. Right? And mutual fund companies are called as asset management companies. They are called as AMCs, asset management companies. Venture capital funds are such companies which give fundings to the startups. They fund the startups. So for venture capital funds also, you will not be applying AS13. So for these all items given over here, AS13 is not applicable. Right? So it is not even applicable for non-banking financial companies. It is not even applicable for financial institutions, because again, they have to follow the guidelines given by RBI only. Then fourth point, very important, investments of retirement benefit plans. You have that LIC retirement benefit plans, you have HDFC retirement benefit plans. So when these plans invest somewhere, those investments are not covered under the under AS 13. Right? Gratuity plans are there. So when these retirement plans, these retirement benefits collects money from the employees and they invest it somewhere. So on those investments, AS 13 is not applicable. They are called as investments of retirement benefit plans. I hope you're understanding this point. So what is the first exclusion? They say that revenues earned on investments, AS 13 is not applicable because it is covered by AS 9. Investments made under leases. So when you are buying some asset and then you're planning to lease it, it will be covered by AS 19. Investments of banking companies, insurance companies, NBFCs, financial institutions, asset management companies, venture capital funds, on them AS 13 is not applicable because they will follow the respective acts. And lastly, whatever investments are made under retirement benefits of the employees, obviously when you are So those are the 4 points which are excluded from the scope of AS 13. So in exam, you may get a question based on the scope of AS 13 and tell you there is one very interesting question which has arisen from this third point. We have it in our question bank. And this was an institute question. I think it had come in May 2019. A very, very good question based on the third point of scope. And many people ended up writing wrong answers in that. But those who are had studied the scope properly, for them, the answer was very easy. So we'll discuss that question tomorrow in the next session. Right. So today I will end up the session. So if anybody wants to take a screenshot, wants to copy it today itself, because notes I'll be making it available today. So you can please take a screenshot of this. And here we end up with today's session.